Okay. Good evening, friends. Welcome to the next technical session. Virtual coaching class organized by Board of Studies, ICAI. So friends, today's session, we are going to have our discussion on tax invoice, debit note, credit note, and e-way bill related provisions. So we'll have an understanding on what is a tax invoice, what details we have to furnish when a tax invoice is to be issued, what is that we need to understand from debit note, credit note, and what are the main provisions which are governed from tax invoice point of view, which is talking about our e-invoice under GST law. Now, you all of you would have heard that effective from October 2020, this e-invoice is coming to play. So we will also understand in today's discussion, what is this e-invoice? To whom this e-invoice is applicable? Also, we will have a discussion on this e-way bill related transactions. So before we proceed further, I would like to get a confirmation from who are listening to me. You're able to see my screen. You're able to listen to me properly. My audio is proper and also video is proper. If you can put a confirmation in my question window, it will be clear for me to proceed in this regard. So let me just check my question window. Yes. If someone of you can confirm that you are able to hear me, you're also able to see my screen, I can proceed. Some technical issues were there yesterday. So let us get it resolved before we go further for today's discussion. Anjali says, good evening. Yes, good evening. Yeah. Raman and Anjali has confirmed. Thanks for confirming, both of you. Let us start our discussion for today. So today, as I said, we will understand the tax invoice, what we have to issue under section 31. When we say tax invoice is in relation to supply of goods, supply of services. Then we will have our discussion on various forms which are prescribed under chapter 6, which talks about your receipt voucher, payment voucher, your what you call RCM tax invoice, ISD invoice, delivery challan. There are various procedures which are formulated in chapter 6. We will also have a thorough understanding on these provisions. Why is it required and how these forms are relevant. When I say forms, these are prescribed formats which are given under chapter 6. Precisely, this talks about your what is a tax invoice, what contents we need to fill when we are filling a tax invoice, and what is your bill of supply. When I have to issue a bill of supply, what is the time limit for issuing this particular document? There is something called a receipt voucher. When I receive money in advance, we need to issue some voucher called receipt voucher. So all these documents, we'll have a detailed discussion in today's topic. We also have next topic on debit note, credit note. So we will have thorough understanding of what is this debit note and credit note under GST law, and what is that we have in our regular accounting debit note, credit note. There is a lot of reconciliation issues when you file your annual returns. So filing of your annual returns is one challenge where we will come across these debit note, credit note related adjustments. And as I promised, e-invoice, this is one of the key game changer under GST law. We will also understand what is the prerequisite for e-invoice and how does it happen. E-way bill, this is the last topic of our today's discussion, where we will see what is the requirements of e-way bill, who has to prepare an e-way bill, what are the laws governing with respect to e-way bill, what will happen if e-way bill is not prepared. So all the permutations and combinations under the GST law, which are revolving around e-way bill, we will try to touch upon in today's discussion. And if time doesn't permit, couple of e-way bill related provisions we will touch upon in tomorrow's session. So friends, before we start our today's discussion, there was one question which was posted by one of our friends in continuation to our last class, which we have discussed on registration. So there was one doubt from one of your friend, Yashodhara. She says that, so due to discontinuation of business, I voluntarily cancel the GSTN. Can I revoke it later, say after 6 months? So this is one question posted by one of your friend. So answer for that question, please understand. Revocation is a process which has been set under the law where the cancellation has been done on a suo motu, means the proper officer under GST law has issued an order for cancellation of your GSTN. Only in that case, I can go for revocation. I being a registered taxpayer, if I have opted for cancellation, please understand there is no revocation. This is where the order has been passed by the officer concerned for the purpose of suo motu cancellation. So answer to that question, Yashodhara, this is my answer. Now, to start with, when we want to understand our tax invoice, first definition which deals with your continuous supply of goods. Now, this is one particular definition which talks where there is a contract. Under a contract, there is a supplier, there is a recipient. Under a contract, there is a supplier, there is a recipient. So there is a supply. Now, what is supply? Already we have studied section 7, where we have understood what all aspects are covered under section 7 to construe, to get applied with the provisions of section 7 dealing with supply. So whenever there is a supply of goods between two persons, supplier and recipient, this is on a contract. So when there is a contract, this supply is undertaking whether or not by means of a wire, cable, pipeline or a conduit. Now, to make you understand better, I'll give you an example of where we will come across this particular continuous supply of goods. Say we have, like if you see the metropolitan cities, we have these big high-rise apartments where the supply of gas within the society happens through a dedicated line. The way we have this water connection from the local municipal authorities, the gas which is required for my domestic consumption, I repeat, the domestic gas which is required in my kitchen, this happens through a dedicated pipeline. So it is like pay as you use. So every month, depending on the number of kgs of gas which is consumed domestically, the service provider or the supplier of that gas raises a bill on me. So this particular provision says that, look, there is a supply, whether or not by means of a wire, by means of a cable, pipeline or conduit. This is what they're saying. Supplier invoices the recipient on a regular basis, on a regular or periodical basis. So what they're saying, look, you have a contract. As per this contract, there's a continuity in supply. So when there is a continuity in supply on a periodical basis or a regular basis, this service provider, the supplier of goods raises a invoice. Now, this is what we need to understand from our continuous supply of goods. So here, the crux of our continuous supply is the supply is happening under a contract using any of the modem prescribed or may not be on any of this modem. The crux is invoice has to be raised on the recipient by the supplier of goods on a periodical basis. Next, in the same lines, my supply of services. The thin line of difference between the first supply of goods and this one, you can see that there is a contract which is there even in relation to supply of goods. Now here they say the contract is exceeding for a period of 3 months. In relation to my goods, there is no reference to contract. In relation to services, they say if there is a contract, by virtue of that contract, when I have to make a supply of service, which is on a continuous basis, which is on a recurrent basis, where the period is exceeding 3 months. So what if the contract is for a period of 2 months? Then they will say it is not a continuous supply of service. Only when there is a continuous supply of service for a period which is exceeding 3 months. So can you give an example for this particular thing? Take example of your the Tata Sky connection or DTH, direct to home service, or your landline telephone related service. Now there is a contract where there is an understanding between service provider and service recipient. Look, I need a support service. Like example, your telephone, landline. When I have my landline, my service provider, the fellow who is giving this telecom service, has given a dedicated line or via a telecommunication network where under a contract, this particular contract is for a period exceeding 3 months. I wouldn't sign with BSNL or MTNL. Look, I'm going to get installed this landline only for a period of 2 months. I would like to have indefinitely. So generally, whenever a contract which is for a bare minimum exceeding 3 months, where there is a periodic payments and obligations. Now, this is the crux, periodic payment obligations. Now here, when you are giving a service on a continuous basis, on a regular basis, how do I determine what is the point in time where this money has to come? In the contract itself, they'll say, look, for this particular service, my billing period starts from the date of commencement till the end of the month. Generally, majority of the cases, it starts from a period where the contract has started, and periodical billing happens on end of the month. This is how generally the services do go. So here, when we understand the definition of this continuous supply of services, please bear in mind, this continuous supply of services is applicable only where this is a contract which is exceeding for 3 months. If the contract is not exceeding 3 months, then we cannot call that as a continuous supply of service. Next, credit note, debit note, invoice. Now first we will start with our credit note. Section 237 says that credit note means a document issued by a registered person under Section 34. Now I would like to show my Excel file for having better clarity on this particular aspect of debit note, credit note. Hope you are able to see my Excel file. Please confirm in the question window. This credit note, I would put into 2 categories. Credit note as per GST, credit note as per GAAP, generally accepted accounting principles. So I have bifurcated my credit note into a credit note which is issued as per GST law. I also have a credit note which is issued as per my GAAP, generally accepted accounting principles. Now, what is the relevance of this? Why we need to understand? Please bear in mind. This credit note as per GST and credit note as per generally accepted accounting principles, the purpose itself is altogether different. Now, if I see this purpose, all relevant provisions of GST law have to be complied. Now, my credit note as per GAAP, if you see the purpose, it says any trade related adjustments for price, quantity, etc. Now, if you see the purpose of a credit note as per GST, credit note as per GAAP, the purpose is under GST law, there are a couple of compliances required. Now, when we go to section 34, we will have a clarity with respect to this credit note, when I can issue a credit note under my GST law. With respect to credit note as per GAAP, generally accepted accounting principles, generally, when my supplier supplies goods to me, when I have received a purchase invoice, when I have been accounting my purchase invoice, I notice that my purchase invoice has got a value of per unit computed at the rate of 12 rupees per unit. As per my purchase order, the value per unit is say 8 rupees. The supplier has mistakenly charged 4 rupees excess to me. What I would do, I'll request my supplier, look, I'm not going to pay you entire 12 rupees. Rather, I'm going to pay you only 8 rupees. Now, this is one mechanism. Second mechanism, I have purchased some goods from a particular supplier. Due to quality issues, there is a deficiency in the performance of the material. I would get negotiation with the supplier saying that, look, I have to pay you a sum of rupees 1 lakh. Because of deficiency in quality, I wouldn't pay you 1 lakh. I'll rather reduce it to 80%, that is 80,000. Now, if you see my credit note as per GAAP, this is a document which has got a holistic view as per my accounting principles. So the points to be noted is my credit note as per GST may or may not be same as per financials. May or may not be same. So this is what we need to understand. So whenever we talk about credit note under GST law, please bear in mind, my provisions of GST law when complied, then I can issue a document called credit note. Sir, what if I have a credit note as per books? If complied, if not complied. The question comes generally, sir, I have issued a credit note. I have accounted a credit note in my books. Now, first thing, if the credit note is in line with my GST law. Sir, what if it is not in line with my GST law? Then we will say credit note as per books, also a credit note as per GST. I'll say credit note as per books, credit note as per GST, if both are matching. Sir, what if it is not matching? We will call this credit notes as financial or non-GST credit notes. So friends, please bear in mind, whenever we are talking about the term called credit note, my credit note as per books, if it is also a credit note as per GST law, because of the complaints as per section 34, we will say credit note as per books, credit note as per GST law. Sir, I have accounted a credit note which is not as per my GST law. I would call, for ease of reference, whenever we talk about taxation, we call that as a financial or non-GST credit note, commercial credit note, other language, commercial or non-GST credit note. So please keep in mind, this is what we need to keep in mind whenever we talk about credit note. So same logic is applicable for my debit note. Whatever we have discussed all along, all this concept is applicable equivalent to my debit note also. My credit note, debit note is same of the understanding or discussion what we have. Jitin has confirmed that Excel is visible. Thanks for confirming, Jitin. Now, this is what we need to keep in mind when we are talking about our credit note, debit note. Now, let me come back to my presentation. Yeah, hope you are able to see back my presentation. Now, please don't, whoever is not able to see this presentation or any technical issues, this PPT is already hosted on the Board of Studies website. You can download and follow with the flow of my discussion. So whenever we are talking about credit note, debit note, friends, this is something we need to keep in mind. Only when we comply with the provisions of section 34, that is GST law, my books and GST law matches. If there is a disparity, don't mind. We call that as a commercial or financial. Next, the term invoice or tax invoice means invoice referred in section 31. We will come to that in detail. Now, this is the next point which I would like to draw attention to many of you who are going to get qualified in a short span, and you may choose to get into litigation, to practice in indirect taxation, or to get into corporate. There's a term called removal, which has been defined in the GST law. If you see the way the law tries to bring clarity on the subject, they have taken utmost care to not to leave a litigation on any front. Now, this term removal has been defined in GST law as this. When we talk about removal, only in relation to goods, services, intangible, we need not talk. In relation to goods, it means dispatch of the goods for delivery by the supplier, thereof by another person, acting on behalf of such supplier. So this is when there is a dispatch. When there is a dispatch of goods, who is going to dispatch? Only supplier can dispatch. Or collection of the goods by the recipient. Collection of goods by the recipient. Now look at the way they have taken utmost care in terms of drafting this particular definition. One way they say dispatch. Another way they say collection. Why is it required? Why is it required? I'll give you an example. Sir, we are talking about, say, Maharashtra. Sir, we are registered in the state of Maharashtra. There is a company registered in Maharashtra. This company has got registered office or the principal place of business in Mumbai. I repeat, this company, say ABC Limited. ABC Limited is in the state of Maharashtra in, say, Mumbai. This company ABC Limited has to purchase goods from a supplier who is there in Tamil Nadu. The supplier is there in Tamil Nadu, the buyer is in Maharashtra. Now, if the transaction, look at the commercial transaction, I can have ex-works, I can have CAF, commercial terms. When we talk about commercial terms, ex-works. The moment the goods crosses the factory of the supplier in the state of Tamil Nadu, I repeat, the moment goods crosses the factory of supplier in the state of Tamil Nadu, we call that as ex-works. Ownership, risk and rewards, everything is transferred to the buyer in Maharashtra. There we come to this point called B, collection of goods by the recipient. The moment the material is crossing the factory gate of the supplier in Tamil Nadu, the buyer has a responsibility. He has got the risk and rewards attached to those goods. So this fellow will go and collect. He may collect on his own or any other person acting. So this collection can happen, any other person acting on behalf, agent, transporter. There is a bailer-bailee concept. My transporter will act as a bailee to get that consignment picked up from Tamil Nadu. So this is one point in relation to collection. So what if it is a CAF transaction? Cost, insurance, freight. The Tamil Nadu supplier, till the factory gate of the customer, he takes the responsibility. All risk and rewards attached to that material is traveled till the factory gate of my customer who is there in Maharashtra. Dispatch of the goods for delivery. Now here, CAF, the delivery is happening by the supplier at the doorstep of my customer. Now this delivery can be done by the supplier, by he himself, or it can happen by any other person. Bailer, bailee, the transporter who comes into picture. So friends, please keep in mind, when we talk about removal, this is nothing but the point that we are trying to define an event which is in relation to this movement of goods. Now, this is one key point which is linked with my issuance of a tax invoice. That is the reason I've been stressing so much on this particular importance of definition called removable. Next. Now, so we have touched upon important definitions. Well, we will move on to important provision called Section 31, which deals with issuance of a tax invoice. So first we will start with goods. In relation to goods, a registered person. Who is a registered person? Last session we have discussed registration. Registered person is a person who is required to get registered, a taxable person who's crossed threshold limit. The person who has obtained a proper registration called registered person. A registered person who is making a supply of taxable goods. Make a note, not exempted goods, only taxable goods. He has to issue a tax invoice. Now, under GST law, a registered person who is making a supply of taxable goods, he has to issue a tax invoice when, before or at the time of removal of goods. Now, first point is removal of goods. Just now we have studied the definition called removal. I, as a registered person, has to issue a tax invoice. When I have to issue my tax invoice, before or at the time of removal. We have understood removal. It is a CAF, factory gate of my customer. If it is ex-works, factory gate of the supplier. So the moment goods are delivered, then I have to issue a tax invoice. Sir, I am staying in Tamil Nadu. My goods have to be delivered to my customer. My goods have to be delivered to my customer in Maharashtra. Should I wait till the goods reaches the destination in Maharashtra, then raise a tax invoice? Please read the language they have used. Before or at the time of removal. They have used before or at the time of removal. So this term before is giving a leeway. I can raise a tax invoice in case of ex-works when the goods are being sent out of my factory. Please understand. In case of ex-works, the goods which is going out of factory, I'll raise at the time of removal. So it is a CF transaction before. because it is meant for CEF to be given at a door delivery in the state of Maharashtra, before that door delivery happens, I'm going to raise my tax invoice. So this is the importance what we need to keep in mind when we are talking about this particular removal. So the law says issue a tax invoice before or at the time of removal of goods. Next, delivery of goods or making available thereof. Now, what is the importance of this? When I say removal, where there is a movement of goods. When I say delivery, there is no any other case. There may not be a movement of goods. So is there a possibility where supply of goods can happen? Supply of goods can happen without movement of goods. Answer is a big yes, where build to ship to model. The goods are lying at a particular location. Example of say 3 parties, A, B, C. Let us take 3 parties. I'll come to my Excel file to make you a better understanding of this particular thing. Let me come back to my Excel file. Hope you are able to see my Excel file. Now, I'll talk about 3 transactions called A, B, C. Now, hope you are able to see my Excel file. A is in, say, Maharashtra. B is in Tamil Nadu. C is in Bihar. Now, B is a seller to A. A is a seller to C. I repeat, this gentleman B who is there in Tamil Nadu. The gentleman B who is there in Tamil Nadu, this gentleman is a seller. He is selling the goods to A. Now, A is a gentleman who is there in Maharashtra, is in turn selling the goods to C. Now, this is a transaction where now A will instruct, now say from Tamil Nadu, goods coming to Maharashtra, again from Maharashtra going to Bihar. Instead of that, the moment goods are crossed the factory gate of B, A, without receiving those goods, he can give a delivery instruction to C. A will say to B, look, give the delivery to my customer in C. So this is an occasion where the goods, even before the moment starts at the factory gate of B, A is transferring the right and title to those goods to this gentleman called C. So here, the point important here is making the goods available to Mr. C. Please make a note. In this transaction, what is important for us? The goods should be made available. The goods should be made available by this gentleman A to C. That means A, he doesn't cause any movement of goods. The occasioning of the goods movement happens at the factory gate of B. Before or at the time, before or after. Before the moment starts or after the moment starts, A is giving a direction to B to transfer it to C or to give delivery to C. This is the occasion which is covered in our slide. So let us go back to our presentation. I'll come back to my presentation. Yeah. So here, when we talk about issuance of a tax invoice, the law says, look, when there is a movement of goods, please issue invoice before or at the time of removal, not after removal. I have to issue invoice before or at the time of removal. In case other than movement of goods, delivery of goods or making available thereof. I'll give one more example. For this particular clause, I'll give one more example for you to understand. Most of us would have seen that many of our clients, they have their business operations in a rented premises. So, assuming that there is a company who have been operating in a rented premises as a service company. Now, whenever you're working in a rented premises or even owned premises, we need to have something called power backup. For that power backup, they will buy something called DG set. Now, when this entity moves for operational purpose or for business expansion from one of the existing premises to a bigger premises, I repeat, this entity moving from one existing premises to a bigger premises, that point in time, they wouldn't carry this DG set along with them. because the DG set, the power backup, that is something which is not permanently, it is semi-permanently fitted to a ground. Why they do that? Not to have this movement of that DG set, they'll affirm, they will fix the DG set to the ground. Now that is particular case where they make this DG set available to the new fellow who's coming to that rented premises. Now, if you look, think of this example. I have a supply of goods where there is no movement of goods. I'm making the DG set available for the recipient thereof. Now, this is a case which was talked about in this category called before or at the time of removal. So friends, please keep in mind, when we talk about issuance of a tax invoice, I have to issue a tax invoice before or at the time of removal of goods. Now, so can we take one example on this to have a better understanding? Sure, we will come to this particular Excel file again. Let me share my Excel file. Say example 1. I'll put the dates here, particulars, date, confirmation. Supply of goods on 15th August 2020. Supply of goods on 15th August 2020. Now I will say removal date. Okay, I'll put this way. Date here, removal, then tax invoice. Scenario. Now, let us take a couple of scenarios to understand this particular point, what section 31 talks about. Scenario 1. Supply of goods on 15th August. Now, when I say 15th August, there is a conditions of my section 7 met. My removal happened on, say, 15th August 2020. Tax invoice issued on 16th August 2020. Can someone say, is this issuance of invoice in line with the law? My law says, issue tax invoice, a registered person making supply of taxable goods has to issue an invoice before or at the time of removal. Now, in this case, my removal happened on 15th August. I've issued tax invoice on 16th August. Is this in compliance with the law? We will say not compliant. Tax invoice to be issued on 15th August 2020. Now, second scenario. Supply of goods, say again on 15th August. Removal happened on 15th August. My tax invoice is prepared on 15th August 2020. So can I do that? Law says, section 31 says, before or at the time of removal. Before or at the time of removal. My removal happened on 15th August. Can I issue a tax invoice on 14th August before the date of removal? Answer is yes. So, yes, complaint. This scenario we are saying that, yes, this gentleman is compliant with the law. Clear? So this is how we need to understand how we need to apply section 31. Now, I'll come back to my presentation. Any people have any doubts? Please let me know. Raman says no. Okay. Raman, maybe for you have answered for PowerPoint or Excel. I am not sure, Raman. Okay. Hope my PowerPoint is back. Now, let us move on to services. Goods, everything is clear. Now, in relation to services, what does the law say? A registered person who is supplying a taxable service, whatever we have discussed, registered person who is supplying a taxable service, that fellow shall, before or after provision of service, the invoice has to be issued before or after the provision of service, but within a prescribed period. Issue a tax invoice. This is what it says as per section 31. Simple. It says it has given much comfort in terms of issuance of a tax invoice. So why is that services doesn't say before or at the time of service? Now here they have used one language called provision of service. Here they also give me a comfort called after. So I'll spend little time for most of you to make you understand why this provision has been drafted this way, how we need to interpret this draft provision for compliance with the law. Now, when we look at service, we need to keep in mind my accounting standard 9, which deals with your recognition of revenue. In relation to service contracts, when should I raise a tax invoice? When there is a completion of service or when there is a provision of service. Please keep in mind, invoice can be issued only when there is a provision of service. Without provision of service, I cannot issue an invoice. Now here, there's a practical difficulty. There is a practical difficulty in a couple of cases. The moment the service is completed, the moment there is a service completed, I cannot issue a tax invoice. I'll give you an example. We have this majority of companies which are so-called software companies. Software company. They say software company, but it's actually a body shop company or a manpower deployment software, manpower deployment agency. I'll give an example. So there is a company called ABC Private Limited. This ABC Private Limited is a contractor to a company called Infosys. Infosys says, I need 100 people who have a experience of 4 years, who can work on Sun, Java, and Oracle. Infosys has given a direction to ABC Private Limited. Look, I need 100 people. Experience 4 years. The exposure and the domain expertise should be in Sun, Java, and say Oracle. Now, this ABC Private Limited goes to Naukri.com, Monster.com, or various sites. They hunt for the sources, send the resume to Infosys, conducts the interview, schedule everything, and then they deploy them. Now, if you look into this whole process, the moment the candidate is selected, provision of service is done, but there is a process called receiving a formal approval. The candidate who has been selected, that fellow has to join. After he joins, there is a cutoff period that at least for a period of 30 days, that fellow should render his service. He should not run away after 10th day or first day of joining. So because of these provisions, I would say I cannot issue invoice immediately. Further to this example, so when I have deployed this 100 people, every month, I need to get a timesheet, something called approval for timesheet. When I have deployed 100 people on Infosys, my Infosys team, the concerned so-called HR or team lead, they will say, look, this gentleman has worked for 8 hours. He has worked for 10 hours. He has worked for 12 hours. This is overtime. This is a holiday. This is deductions. Now they will work out, and end of the month, maybe 3 or 4 days they will take to process the timesheet and give a approval. So there is a delay in getting a approval for billing. That's why law says in case of service alone, I'll give you a time for issuing an invoice even after provision of service. This is the crux what we need to understand in relation to section 31. Section 31. Okay. Now, coming back to our example, there is something called, but within a prescribed period. So what is a prescribed period? Please make a note in your working note. Please make a note in your working note. In relation to services, 30 days is the time limit the law prescribes. In relation to services, 30 days is a time limit given. Is this applicable for all? Answer is no. Sir, in relation to banking sector, insurance company, non-banking financial sector, banking company, insurance company, non-banking financial company, NBFC, the time limit is given for 45 days. I repeat, from the date of provision of service, in general, 30 days is a time limit, 30 days. Only in case of insurance, a financial company or a NBFC, time limit is given is 45 days. This is what we need to understand from the GST law. So hope friends, this is clear with respect to my provision of service where a tax invoice should be issued under 31. Now, This is one provision where government has kept a control on their end to specify that, look, there's a category of services or there is a category of supplies in which category, in this particular category, a tax invoice can be issued within such time or as may be prescribed. Government says there could be a rule, there could be an order by which I'll specify that this is a service for which this is a time limit. Now they can define based on need to case basis. Further, they say subject to further conditions, there are specific categories of services in respect of which any other document issued in relation to supply shall be deemed to be a tax invoice. Tax invoice may not be issued. Now, this is something which we need to understand from our practice point of view, not from examination. This is all from practice point of view. Any other document, tax invoice may not be issued. Now, if you see during your articleship, when you are doing your bank watching, doing a bank reconciliation, there's a bank account, like in your bank statement, there's a debit by way of bank charges, some 350 rupees or 348 rupees. When you look into the breakup, they'll say, sir, 320 rupees is bank charges. Upar ka 28 rupees is my taxation. Could be service tax or could be GST. Now that particular thing, when I looked into my bank statement, I could see that there's a bank charges. Now when you call for, sir, you haven't given a tax invoice, banker will give a small CT or small letter, small statement where he will say, bank charges so much for LC opening, for bank guarantee, for liquidation, for giving some account opening, processing your account, various nomenclature. For that, this is the amount. He will not give all the details what a typical tax invoice looks like. So this is what we need to understand, that government said in couple of notified cases as of now, banks, insurance company, NBFC, and these people who issue your travel tickets. There are a set of people who have been notified in this particular regard. Next important aspect, this is one slide. I refer you to focus on this from your complaints, GST audit point of view, from your internal audit point of view. Whenever you have done your internal audit or GST audit, focus on this particular slide from watching point of view. When we do watching of purchases, when we do verification of bills on a tax invoice, generally the contents what you can see on my slide are required. The GST of supplier, recipient of supplier, address of supplier, address of recipient, amount of taxable value, amount of tax charged on that. What is the place of supply if it is an interstate supply? Description of goods or description of services. Is the tax payable on reverse charge? Yes or no? What is the rate of tax applicable? Then name and address of the recipient if not registered. Finally, HSN. Now, there's a couple of information which have to be predominantly there on a tax invoice. Now, many of the cases you see when you're doing your auditing, you're watching, you will see a bill where the heading tax invoice itself is not written. So when there is no heading, how do you know that it's a tax invoice? So there is a heading called tax invoice. They'll say, Mr. Ramesh, that's all. When the hotel accommodation, most of the time, Mr. Ramesh, within brackets, company ABC, that's all. They don't even say company ABC Private Limited, address having so-and-so, Maharashtra, Goa, Punjab, Haryana. They wouldn't say anything. They will just say, this is a rental charges, this is amount, this is a GST. Now, please ensure that whenever a tax invoice is issued, in case of B2B, there are 5 red color, 1, 2, 3, 4, 5 red color items which are compulsory as per my rule 36. So when you're doing your audit, these 5 categories. What is that? GSTN along with the address of supplier and recipient in case of B2B, compulsory. What is the amount of tax involved in this particular category supply? SGST, CGST, IGST. What is the amount of tax? Compulsory, it has to be bifurcated. Most of the cases will say 18% GST. Now, when I say 18%, is it IGST, CGST, SGST? There should be a specific mention towards amount of tax into the nature of charge. Taxable value, on what amount this levy is happening. Then description of goods or description of services. These are the 5 elements, place of supply in case of interstate supply. These are couple of category which is compulsory for someone to have mentioned on a face of a bill. If these details are not there, lawmaker, the proper officer, can deny input tax credit under GST law. Please read Rule 36, Sub Rule 2. Make a note in your working note. Rule 36, Sub Rule 2. These are the basic information which have to be mandatorily there on a tax invoice, which you need to focus when you're doing your coaching. Next. So what else is required on a tax invoice? Now we have understood what details are to be required. This is clear. Now further, my tax invoice says that, look, in case of a zero rated supply, Section 16 of IGST Act, Section 16 of IGST Act. So whenever you are issuing a tax invoice in relation to export of goods or export of services, in relation to SEZ unit or SEZ developer, authorized operations of SEZ unit or SEZ developer. So please keep in mind, whenever a tax invoice has to be issued for zero rated supply. What is zero rated supply? Please write down in your working note. Section 16 of IGST Act 2017. As per that, whenever I make a zero rated supply, I being a registered person, I being a supplier of goods or supplier of services, has a choice to make a zero rated supply without payment of tax or with payment of tax. First, let us talk about without payment of tax. Then we'll come to with payment of tax. If I'm making a supply without payment of tax. Now, why we talk about integrated tax? We know that when we talk about place of supply, any supplies to SEZ unit, any supplies out of India are interstate supply. The moment I say interstate supply, IGST comes in. So by default, as per Section 16 of IGST law, I can make a zero rate supply without payment of tax. Now, this without payment of tax, I can do under bond under LUT. Now, there is a spelling mistake over here. Let me do the correction of that. LUT. Now, sir, what is this LUT? LUT is a mechanism. LUT is a mechanism where I can obtain a permission from. I can obtain a permission from the proper officer. The proper officer says that. Look, when you are exporting the goods out of India or when you are exporting the services out of India, you have to give an undertaking. You have to give an undertaking to whom? To the government authority, to the proper officer, stating that you are going to repatriate the funds. You are going to actually export the goods out of India. All that comes under my bond or LUT. So if you don't want to pay the taxes, I'll give you a free hand. Please export the goods. Please export the services. Ensure that the goods travel out of India. Ensure that goods are given to SEZ unit or SEZ developer for authorized operations. This case, I can do only under a LUT or bond. I need to mandatorily mention on my tax invoice. I need to mandatorily mention on tax invoice that this is a supply meant for export to export or supplies to SEZ or SEZ developer for authorized operations. This is a language which I have to mention on my tax invoice. So is it compulsory? Section 31 read with Rule 46 says yes, it is compulsory. So what if I'm exporting under payment of tax? Now this export with payment of tax, when we deal with refund, I'll touch upon in detail. Why do we make an export? Why do we supply to SEZ with payment of tax? If it is with payment of tax, I have to put this language called, it is a supply meant for export or a supplies to SEZ unit or SEZ developer for authorized operations. This is something which I have to mandatorily put when I'm issuing a tax invoice to a zero rated supply. Now, further, my law says, look, when you're issuing a tax invoice, please keep in mind, in relation to goods, please print 3 sets. In relation to services, please print 2 sets. What? Tax invoice. This is one provision which was carried as it is from Central Excise and Service Tax. Under VAT laws, this cumbersome requirement of original, duplicate, triplicate was not there. Thankfully, after e-invoice has come in, this provision itself has been scrapped in relation to e-invoice. We will touch upon that later. So it says that, law says that in relation to goods, please prepare original for recipient, duplicate for transporter, triplicate for supplier. In case of services, original for recipient, duplicate for supplier. Now, HSN. Now, please keep in mind, expect a 2 marks question from your May 2021. Reason, there is an amendment to this particular slide. What you are seeing now, this is for your examination. With effect from 1st April 2021, with effect from 1st April 2021, this slide has undergone a change. So till March 2021, this is a slide, this is a provision applicable. Even for your May 2021, this is a provision in relation to mentioning of HSN code. So please expect 1 2 marks question from this HSN. When I issue a tax invoice, as a registered person, if my aggregate turnover is less than or equal to 1.5 crore, HSN mandatory nil. I can issue 0 HSN or 2 digits. If my aggregate turnover is more than 1.5 crore, up to 5 crore, then mandatorily 2 HSN digits I have to quote on my tax invoice. So what if my aggregate turnover is more than 5 crore? 4 HSN digits I have to issue. From 1st April 2021, this nil was made as 4, 2 was also made as 4, 4 was made as 6. So this is one change which has happened from 1st April. Next, revised tax invoice. Friends, this is one concept which we carry forward from previous discussion called registration. Now, this concept says issue a revised tax invoice. Now, I'll explain this provision this way. In the last class, we have discussed that in relation to a triggering point, what is a triggering point? Aggregate turnover exceeding the threshold limit under section 22 or compulsory registration under section 24. If at all, any of the triggering point under section 22 or 24 has been triggered, we as a registered, we have to file an application for registration. We have also understood that for CTP, casual taxable person, NRTP, 5 days is a time prior to commencement of business. I have to file an application. In any other case, 30 days from the date of liable for registration. 30 days from the date of liable for registration, I have to file for an application. Now I'll take you to my Excel. To make you much more clear with this particular requirement. Now, examination, again, 1 2 marks question you can expect from this particular provision. Let us talk about example for registration and revised tax invoice. Now, let us understand that Mr. A is liable for registration on 17th July 2020. 17th July 2020. Now, I'll put dates here. Liable for registration, 17th July. Application file. I'll take this as example 1. Scenario 1. My application has been filed on, instead of say I have filed my application for registration on say 31st July 20. My application for registration has been filed on 31st July 20. Now, was it filed as per law, as per section 25? Answer is yes, within 30 days. Within 30 days. Now here, what is the effective date of registration? Please bear in mind, examination, this is what they are going to test it. When I file my registration within 30 days, my effective date of registration is the date liable for registration. Date I am liable for registration. Now, what is the date I am liable for registration? 17th July 20. So, my effective date of registration is 17 July 20. Are we clear till now? I'll explain this example once again. Mr. A is a person who is liable for registration. This gentleman has become liable on 17th July 2020. Application for registration. This is filed on 31st July 2020. As per the law, from the date he is liable, within 30 days I have to apply. From 17th July, if you see what is if I count 30 days, my 30 days gets over on 16th August. I filed on 31st, much within that day. So if application is filed within 30 days, my effective date of registration is the day when he is liable for registration. Are we clear? Yes. Now, moving further. Raman has confirmed. Yes. Now, I'll slightly alter this particular, extend this question this way. Proper officer granted registration on this gentleman. Once I filed an application, the proper officer has to give me application, but he gave me a registration effective from say I filed an application on 31st July. He has given my registration on 5th August 20. Now, this is a case where my revised tax invoice comes into picture. What happened? Practically, the government officer, he has received the application. Some technicality, he couldn't process that. He has received the application. He kept it for clarifications. Clarifications are received. Again, he has to issue registration within the stipulated time as per section 25. He delayed in issuing. Now, once my application has been approved, now when was that registration was made effective? It was made effective from 5th August 2020. But as per the law, I'm supposed to be, my date of registration is supposed to be from 17th July 2020. Now, look at these dates. 17th July 2020, 5th August. Now, this is the period in between which I call intervening period. I call this as intervening period. Now, between this intervening period, assuming I make a supply of goods or services. I cannot issue a tax invoice with GST. Reason, without my GST number, I cannot issue a tax invoice. So, whatever supply has happened, supply of goods or services happened, I can issue a tax invoice. The law says, please issue tax invoice called revised tax invoice for the intervening period. This is what the law says. Reason, look, as per the law, you are supposed to get registered on 17th July. Some technicalities, your registration was made effective from 5th August. So when I go to the GST portal to file my returns, July month is not visible. Reason, my officer has given registration was effective from 5th August. Already I made supplies from 17th July till 5th August. What will I do with those? Can I issue a tax invoice? Law says, don't worry. You can issue a tax invoice as per GST law, where this concept of revised tax invoice can be issued. This is what the provision says. Let me come back to my presentation. Now, the law says, if the application is filed within 30 days of triggering point, my registration is effective from the date of triggering date. If my application is filed after 30 days of triggering point, my date of approval, whenever the proper officer is approving, that is my date of registration. So law says from the application, that is from the effective date of registration till issuance of registration. Intervening period, that is, for that intervening period, as per my section 31, I can issue a revised tax invoice. I can issue a revised tax invoice. When I have to issue within 30 days from the date of getting my registration, I have to issue something called revised tax invoice. This is what the provision says. Now, also the law says, look, if the value of supply is less than 200, instead of issuing the supply separate tax invoice, you can consolidate those and issue one invoice every day. I'll give an example. Think of Excite batteries. Think of Excite battery. Excite battery, they have this service engineers who go door to door, factory to factory, company to company for doing a EMC, maintenance of the battery. Whenever that gentleman comes to the customer's premises, it could be a B2C customer, it could be a B2B customer. Now, COVID is one time where we have seen this dependency on power backups very, very high. The share prices of this entities, Excite batteries and Amara batteries have shooted up like anything, and the target, the demand was peak for these guys. Now, example of this company, whenever they visit this door-to-door customer, every door they collect say 100 rupees, 150 rupees, 120 rupees. It is bulk. On an average in a day, they have say 1000 to 1500 invoices in a particular region. Instead of issuing 1500, they can consolidate those small invoices and issue one invoice in case of a B2C. That is what they say. Next, issuance of a bill of supply. All along, we have talked about tax invoice. Now, this provision says you issue a bill of supply, a registered person who is making a supply of exempted goods or exempted services, or a registered person who is paying tax under section 10 shall issue a bill of supply. This is what the law says. I repeat, a registered person who is supplying the exempted goods or exempted services, or a registered person making a supply of goods under section 10, then that gentleman issues a document called bill of supply. Instead of tax invoice, they have issue called a bill of supply. So what is the contents to be given? The name and address of the supplier and recipient, description of goods and services, and a consecutive serial number with 16 characters, HSN of goods and services, date of issue, taxable value, and sign of the supplier. Normal aspects. Then we move on to the next document as per section 31 called receipt voucher. Section 31 says, when we read about this particular slide, I draw your attention to the previous discussion of the faculty who touched upon time of supply of goods, time of supply for services. Please read section 12 in relation to time of supply of goods, section time of supply for services. That is one document, one provision which is linked with this particular slide. So please make a note in your working note. Section 13, time of supply for services. Section 13(1)(3), time of supply for services, hyphen, receipt of advance, receipt of advance. Now, please keep in mind, whenever money is received in advance in relation to supply of taxable services, my time of supply triggers, that is the date of receipt of advance. Generally, after provision of service, I need to raise a tax invoice. But when we talk about payment of taxes, that is time of supply, my time of supply is triggered the moment I receive my advance. So should I need to issue a tax invoice the moment I receive advance? Answer is no, a big no. Issue a tax invoice only when there is a provision of service. So what if I receive money in relation to a supply of services or goods? When I receive advance, issue this document called receipt voucher. Issue this document called receipt voucher. So this receipt voucher says, whenever you receive money in advance as a supplier of goods or services, you issue this document called receipt voucher. What is the contents to be there? How much is the money received? What is the description of goods or services? Who is the recipient? From whom I have received? What is the GST number of recipient? All this information I have to mention. The big question comes here. What is the rate of tax? What is the nature of supply? This is a big question which comes when there is a multi-spread organization. I'll give an example of, say, a construction company. I'll give an example of, say, ABP Limited. Take example of L&T. Take example of L&T. L&T is a construction company. L&T has got a customer called Infosys. Infosys have got their presence across all over India in 18 states. Infosys has given an advance of 3 crores for various projects. Now, the moment L&T receives that money called advance, first and foremost, that is in relation to supply of goods or services. A question. Assuming I say it is in relation to supply of services, section 13 gets triggered. I need to pay tax. Sir, I am ready to pay tax, but I don't know what is the rate. I don't know whether it is for a supply in the state of Maharashtra, in the state of Haryana, in the state of Tamil Nadu, in the state of Telangana, or in the state of Kerala, in the state of Odisha. Sir, I don't know. That is how where Rule 50 says, when you don't know what is the rate of tax applicable, you don't know whether it is an intrastate or interstate, they say, consider that the rate of tax is 18%, consider that it is an interstate supply and issue a receipt voucher. Please bear in mind, one question example for 2 marks can be expected from this particular adjustment called issuance of a receipt voucher, where there is no clarity with respect to nature of supply, intrastate or interstate. I don't have a clarity towards rate of tax in relation to that receipt. So this is what we need to understand in relation to receipt voucher. Next, refund voucher. Refund voucher is a mechanism under Rule 51 where supplier issues a receipt voucher to a recipient when money is paid in advance. Some reason, the supply didn't took place and the tax invoice also was not issued. Now, you know that as per section 13, the time of supply is triggered. I have paid tax on the advance to the government. Now, as per the law, this supplier has to issue a voucher called a refund voucher to the recipient. This refund is a voucher, is a mechanism where money received from recipient is paid back to the recipient. Whatever money is collected by the supplier is paid back to the recipient. Now, when he is paying that money back, whatever taxes were paid to the government on the basis of receipt voucher can be offset in my GST returns. That is a funda which is revolving with my refund voucher. Now, this is pretty important provision called self-tax invoice. Self-tax invoice. Self-tax invoice is a provision, is a mechanism majority of the students have not properly covered in their audit. When you're doing your GST audit or when you're doing your internal audit, this is one provision majority of you would not have touched. Now, this section 31, subsection 3, section 31, subsection 3, clause F. Clause F. This provision says that whenever there is a supply, that supply is done by a supplier who is not registered on the date of supply. I repeat, supplier is a fellow who is not registered on the date of supply. That supply is attracting the provisions of 9394. This particular supply, I repeat, this particular supply attracts the provisions of 9394. Sir, what is 9394? Please recap your basics. Section 9, levy. In section 9, levy, 93, notified list of goods, notified list of services. Any notified list of goods, any notified list of services supplied by a supplier to a recipient. Example, GTA. Recipient has to pay tax on RCM. That is called 93. 94. Notified list of goods or services supplied by an unregistered supplier to a registered recipient. I repeat, notified list of goods, notified list of services supplied by an unregistered supplier to a registered recipient. Provisions of 94 gets triggered. So what I have to do? This supplier, this recipient, who is recipient? Registered recipient. That gentleman should issue an invoice in respect of those goods and services, which we call as self-tax invoice. I have written something called Rule 46. Now, this provision says that whenever you are talking about this supply, whenever you're talking about a supply where the law has made the responsibility, on recipient. Law has made a responsibility on recipient for what? To issue an invoice. That is a point in time where this self-tax invoice comes in, where whatever details are there in a tax invoice, what we have discussed a while ago, same details I have to mention. I would say name of supplier, so-and-so, unregistered or registered supplier. Recipient, I am the person. Description of goods or services, I'll mention. HSN, I'll mention. Rate of tax, I'll mention. Details, I'll mention. I'll mention all these details, and I, as a recipient, will pay tax to government. So here, this particular provision says that whenever there is a supply, where the responsibility has been casted on the recipient to issue a self-tax invoice, law says that you raise a self-tax invoice. Please write down in your working note, Rule 36, Sub-Rule 2. This Rule 36 says, list of documents required for availing input tax credit. Please keep in mind, this self-tax invoice is one document which is compulsory for me to avail input tax credit. This is what we need to understand as per Rule 46, read with Section 31, Subsection 3. Friends, whoever has got any doubt which you have come across in terms of your articleship, or you have any specific example to understand in relation to this refund voucher, receipt voucher, you can interrupt. I'll give more clarity in this regard. Now, further, in relation to continuous supply of goods, we have understood what is the supply of goods. We have understood what is the supply of services. We have understood what is a point in time when a tax invoice has to be issued, where in relation to removal of goods. In relation to services, provision of services, we have understood. Now we come to this crux, again, examination. Please expect one adjustment for 2 marks in relation to continuous supply of goods. When we talk about continuous supply of goods, this continuous supply is by virtue of a contract. There are two parties. Continuously the supply happens. The law says, where successive statements of accounts or payments are involved, I repeat, as per the contract, there is a successive statement of accounts or successive payments are involved. So they say, wherever there is a statement of account to be furnished or a payment to be paid as per the contract, either of these two, invoice shall be issued before or at the time of that particular issuance of a statement of account or before involving that particular payment. Before I receive that payment. Law clearly says, look, as per your contract, the point in time where a statement has to be issued, like your domestic gas case, sir, every month, the moment 30th gets over, on 30th, I issue a bill called, this is your supply of gas for that particular month. Law says, whenever you generate that statement, issue an invoice before or at the time of issuing that particular statement. Before or at the time of issuing that particular statement. Sir, if I issue a statement on 31st July, if I raise a bill on 1st August, is that acceptable? Answer is no. Provision says before or at the time. The moment I raise a statement on 31st July, I am bound to raise a tax invoice on 31st July. Sir, I raise a statement on 1st August. Can I raise a tax invoice on 31st before or at the time? Answer is yes. Sir, can I raise an invoice on 1st August? Again, answer is yes. Reason, I'm linking my responsibility to statement of account. If there is a successive payment, before such payment is received, as per the contract, every month 30th or 31st, I have to read the payment. So if the payment is coming up on 5th, I'm not looking at 5th, as per the contract, 30th or 31st. So raise the bill on or before 30th or 31st. So here we are linking with the event of issuing a statement or receiving a payment. Now, in case of continuous supply of services, please bear in mind, this is little tricky one. Where there is a continuous supply of service, services are rendered on a contractual continuous basis. As per the contract, if the payments are ascertainable, as per the contract, if there is a point in time where I can ascertain that this is a point where my payment has to be paid. So issue an invoice on or before the due date of payment. Sir, there is no possibility for me to ascertain the date of payment. Then before or at the time when the payments are received, as per the contract, I don't have a clarity when I have to issue a tax invoice. Don't worry. Please issue your invoice before or when payments are received. Sir, neither I have clarity with that nor payments. Payments are linked to completion of event. When the contract says you can raise a bill at the time of completion of event, then law says that issue an invoice on or before completion of such event. Now, this is one provision which are mostly linked with your turnkey projects, So before or completion of that event, please raise a tax invoice. So what is the value addition for us as chartered accountants? Provision of service, documentation. How do I ascertain what is the time, what is the point in time when the event has been completed? This is how we need to interpret, we need to ensure documentation to ensure compliance with the law. Now, this provision says, look, under the contract, the services are getting completed, service is getting terminated. So when there is a termination of contract before completion of service, this section 31 says, whatever portion of service is completed, please raise a bill. That is something which everyone will take care. Now, there is one provision called goods sent or taken on approval. I'll give an example for this provision. Take example of jewelry business. The jewelry shop owner who has got a client, we call that as a HNI, high net worth individual. Most of these high net worth individuals are the celebrities, so-called celebrity. They wouldn't come to the jewelry shop. Rather, the bunch of jewelry goes to the celebrity house for selection. After the selection, unwanted pieces come back. I have sent the jewelry, the goods, sent or taken on approval. The goods being sent on, taken on approval for sale or return. When I'm moving the goods out of my shop, when I'm taking the goods out of my factory, when I'm taking the goods out of my registered premises, the goods are meant for approval for sale or return. The goods are taken on approval either for sale or return. That point in time, I don't know how much they are going to buy. I don't know whether the customer will buy or not. That is the point. Those goods are removed before the supply takes place. When can a supply take place? Supply can take place only when there is an acceptance by the customer. Say I have sent 10 set of jewelry. My customer is willing to buy 4 set of jewelry. I can raise an invoice only when there is an acceptance, only there is a transfer of ownership. Unless the customer is accepting, I cannot raise a tax invoice. So the invoice shall be issued before or at the time of supply or 6 months from the date of removal. Now when I say before or at the time of supply, for removal, I come back to our first definition called removal. How do we calculate date of removal? CAF FOB. That is one provision you have to interlink here. The day when my customer is accepted, that is the point in time where my triggering point of removal comes in, where I issue a tax invoice to the extent of 4 sets which are accepted by the customer. Now, assuming, sir, within a period of 6 months, if the supply didn't took place, if the acceptance didn't took place, then they say there is a deemed time of supply which is happening on the date of removal. The law says you have removed the material for supply. If you raise invoice within a period of 6 months, well and good. If you don't raise a invoice within a period of 6 months, the day you have removed the goods for sale on approval, that shall be the date deemed to be a supply. So that is how they say whichever is earlier. Law very clearly says, if you are sent on approval basis, please ensure that within a period of 6 months, you raise a tax invoice. If I raise a tax invoice within a period of 6 months, nothing to worry. If I don't raise, the day you have taken out material for removal, that shall be deemed to be a date of supply as per section 31. This is what we need to understand. Next. Let me see if there are any doubts till now. So far so good. No doubts. Okay, let us go for it. Rule 55, which talks about delivery challan. Now, this is one concept most of the time when you are into tax planning, when you are into consultancy, when you are into advisory. This is one thing which you need to keep in mind. Not that all the cases I can issue tax invoice the moment goods are moved. Taking the goods out of the factory, I'm taking goods out of the factory for job work. Sir, I'm taking the goods out of the factory for sale on approval basis. Sir, I'm sending the goods out of factory for warranty, for various things. Then I can use something called delivery challan. Delivery challan is a document in lieu of a tax invoice. That means other than a tax invoice. I issue, not in lieu, it is a case where a tax invoice is not required. A case where a tax invoice is not required or a supply doesn't take place, I issue a document called delivery challan. As per Rule 55, they say transportation of goods without issue of invoice for supply of liquid gas. Liquid gas where the quantity at the time of removal cannot be quantified. So if there is a movement of goods that is liquid gas where at the time of removal I cannot readily quantify that quantity, or the goods are meant for job work, transportation is other than supply, or for a set of notified goods, then I can use a document called delivery challan. So this delivery challan should have some basic information called name of the person who's moving the goods, name of the person who is a consignee, HSN description, what is the quantity of the, what is the description of the goods, what is the volume of the goods, quantity, taxable value, tax rate, is it meant for movement of interstate? If it is interstate, what is the place of supply? Assuming if there is a supply which gets triggered. And this delivery challan as tax invoice, 3 sets are required. Like original for consignee, duplicate for transporter, triplicate for consignee. Along with that, continuation of our last class, where job work section 143 of written called ITC 04 has to be filed on a quarterly basis. This is something we need to understand in relation to Rule 55. Now, this is one important case called CKD SKD. Completely knocked down, semi-knocked down. I'll give an example of ISRO. Say, there is one organization called DRDO, Defense Research Development Organization. DRDO has developed a particular rocket launcher, one particular machine, which has to be supplied to ISRO. So ISRO is having its place of business in the state of Andhra Pradesh. From DRDO Maharashtra, one consignment has to be shipped to ISRO, which is there in, say, Andhra Pradesh. Now, this is a movement of goods. Now, DRDO is a government undertaking. I'll give an example of a private agency. Instead of DRDO, let us take a company called Hindustan Aeronautics Limited, HAL, who are registered in the state of Maharashtra. HAL is moving a machinery to ISRO in the state of Andhra Pradesh. Now, that machinery is very bulk machinery, rocket launcher. Around 10 lorries are required to send that particular one consignment. For that particular consignment, only one tax invoice can be issued because it is one unit which is shipped in 10 different consignments. Now, that is the point where they say, raise one invoice, every lorry, raise one delivery challan. Along with the delivery challan, give a self-attested copy of tax invoice and send that lorry along with the delivery challan, stating that this is one consignment as per the invoice, and every lorry has got a delivery challan along with an e-way bill and a self-certified copy of an invoice. and send the original copy of invoice with the last consignment to the recipient. This is what Rule 55 talks about your CKT or SKT's consignment. Next is your ISD. Last class we have you have read section 20, which deals with your ISD concept. Now, as per the GST law, Rule 54 gives a clarity what details have to be given in an ISD and how ISD invoice has to be issued. Please bear in mind, the tax invoice under section 31 is completely different compared to a ISD invoice issued under Rule 54. Like a tax invoice, ISD debit note, ISD credit note. Whatever we talk about tax invoice, all are applicable to ISD. So a person who is registered in ISD, if he wants to transfer the credit to other recipient, then he has to issue a document called ISD invoice. So what if I have issued more credit? Instead of distributing 100 rupees, I have distributed 120 rupees. Issue a document called ISD credit note. Sir, what if I have to distribute 120? By mistake, I have distributed only 100 rupees. Issue a document called ISD debit note. So the law says, as per Rule 54, issue a input service distributor invoice, ISD debit note, ISD credit note. Whatever details are there on a debit note, credit note, or tax invoice, more or less the same thing have to be issued in terms of Rule 54. Now, as per Rule 54, special category, non-banking financial company or a banking company or an insurance company. These agencies, they will not issue a tax invoice. They can issue a piece of paper which is as good as a tax invoice. It is not compulsory that they have to issue only a tax invoice. Any other document by whatever name they call. Now please read the language they used. Tax invoice or any other document by whatever name they call. Because so much of the volume of transactions are there, lawmaker says, please issue any piece of paper. I presume that this is a tax invoice. Whenever there is a supply of services, any document which is issued electronically or physically, which is serially numbered, I consider that this is a document which is issued in compliance with GST law, both for the service provider and recipient for availment of input tax credit. In case of GTA, again they say, please issue any invoice or a tax invoice or a document. Generally, we have this consignment note where they will say, what is a consignment, consignor, consignee, what is a goods, what is a vehicle through which these goods have been transferred, and who has to pay tax in relation to this particular consignment. This is what Rule 54 talks about GTA. In case of a passenger transportation, again, if you see your Haryana Transport Corporation or Madhya Pradesh Transport Local Transport Corporation, Tamil Nadu Transport Corporation, these agencies, they issue an invoice which is not having all particulars as a business regular tax invoice. Any document which is having a different series. It may have a GST number, it may not have a GST number. It may have an address, it may not have address. This is a specular thing. They say the moment you issue an invoice with GST number of recipient, it is good enough for complaints for availment of ITC. Similarly, for your movies, when you go to this multiplex screens, etc., any document which is issued which contains the amount collected and the tax thereupon, that is good enough to say this is an invoice issued under your GST law. So friends, this is what all together we need to understand with respect to tax invoice. Now we move on to the very, very important topic of today's discussion called e-invoice under GST law. E-invoice under GST law. Have attention to this. Reason this which has come from October 2020 and November 2020, this was not tested for various amendments which took place in October, November, December. But for sure, May 2021, expect one 4 marks theory question or a 6 marks theory question from e-invoice under GST law. So for that purpose, I draw your attention. Before we go to the e-invoice, I would like to show you how e-invoice looks, what contents or particulars are required, and how this e-invoice is generated. Now, to start with, this is one template which is given by NIC, National Informatics Center, which is there in the state of Karnataka. This is one agency, government nodal undertaking, who is managing e-invoicing under GST law. Also, e-waybill portal. So NIC has launched this particular model, which I have put it for public circulation. When I look into my e-invoice, this particular document consists something called, let me take this selector. Yeah, and you have seen something called a barcode. This I don't call as a barcode, QR code, quick reference code. Barcode is where you have that lines, like your any product you have MRP next to that barcode. The moment you scan, it throws on what is the details of the product. Now this is called QR code. A scanner can be used for barcode and QR code. This box I call that as a QR code. Under e-invoice, this QR code is something which is required. Then e-invoice details, something called IRN. Technical term, invoice reference number. This is a fixed 56-digit hash key. I call that as a hash key. It's a rocket science. Don't break your head. The moment I generate an invoice, automatically this IRN is thrown out from the IRP. What is an IRP? Invoice Registration Portal. I'll take you through. Don't worry. My government portal is throwing out something called IRN. IRN is a unique number. This unique number, we call that as a hash key. What is an hash key? Hash key is a key which is embedded with some key information. Now, this gives me a acknowledgement number. That means when I have filed this data to the government portal and what date this acknowledgement with this IRN has been generated. Now, this invoice, what is the category? Is it B2B? Is it export? Please write down in your working note. E-invoice compulsory for B2B supply, export, supplies to SCZ. I repeat, e-invoice is compulsory for B2B, export, SCZ supply. So as of now, for your examination purpose, any supplies to B2B, any supplies to export out of India, any supplies to SCZ unit or developer, e-invoice is compulsory. So here category B2B, export with payment, export without payment, SCZ supply with payment, SCZ supply without payment. This is a category which is printed on the invoice. Now, only when I issue a tax invoice, I have to raise a e-invoice. If there is no tax invoice, no e-invoice. Document number, what is the invoice number and what is the invoice date? This is the first set of basic information. So please bear in mind, first requirement IRN, second requirement QR code. Please write down in your working note IRN, QR code. IRN stands for Invoice Reference Number, QR code. Now, examination, please expect one question from your e-invoice for coming May 2021 attempt. Next, what else is required in my e-invoice? This e-invoice, when I have to generate, unless some basic information is there, I cannot generate a e-invoice. What is that? Who is the seller? GSTN. By default, the moment I log in, my GSTN is selected. So, as a supplier, from where you are dispatching these goods, as a seller, from where you are dispatching your goods, I can be registered in Karnataka. I can make a supply from the state of Tamil Nadu. Now, who is the buyer? What is the GST number of the buyer? Where the consignment has to be shipped? And what is the place where the consignment has to be shipped? Now, please understand, there are 4 details available here. On the supplier side, the fellow who is making a supply, the place from where the supply is taking place. Here, there is a company called Bando India. This entity is making an invoice from this particular location called Tamil Nadu. He is selling the goods to TVS in the state of Tamil Nadu. So buyer and seller details is something which is required. Next, goods details. Now, this is again one more thing which we need to keep in mind. When I have to raise an e-invoice, my information of goods or information of services. In case of services, service accounting code. Without this information, what is the product description, HSN code, quantity, unit price, discount, taxable value, tax rate, other charges, and total. Now, please bear in mind, unless this information e-invoice shall not be generated. And once e-invoice is generated, look here, digitally signed by NIC. Now, this is a signature which is by default generated on my document. So, these are the basic information which are required for e-invoice. So, to sum up, whatever information is there printed on an invoice, on a tax invoice, all this information is being collected by the government portal, where that is summed up together and a IRN or invoice reference number is generated. Without that, my e-invoice cannot happen. So this is what basic things which we need to, how my e-invoice looks like. Since I cannot show one invoice, the invoice itself into three category I have broken up and I have presented for your understanding. Now, what are the advantages of e-invoice, why e-invoice is required, etc. Now, government has brought in this concept called e-invoice, where they say, under this e-invoice, we are going to make business to interact with each other. Also, government said the filing of returns or ease of doing business is going to happen with this path-breaking introduction of e-invoice. How does it going to happen? The government said, look, the moment you generate an e-invoice, e-way bill also can be generated along with that. Please make a note. Along with e-invoice, e-way bill can also be generated. So here, the government says the moment you push your invoice details to the government portal, whatever e-way bill is required, in a click of a button, you can generate the same. All the details of transporter and my invoice details can be given for e-way bill generation. Your process of logging into another portal, preparation of e-way bill is avoided. Further, government says, look, I'm going to report this e-invoice into your GSTN for filing your GSTR1. When I file my GSTR1, in GSTR1, if you see, there is a table called 4A, there is a table called 6A, there is a table called 9A. People who are familiar with the GST filing, you will familiarize yourself with these tables. People who doesn't have exposure, don't worry, I'll brief you. When I look into my GSTR1, please make a note in your working note. Table 4A, B2B supplies. Table 6A, export zero rated supplies. Table 9A, 9B, debit note, credit note related transactions. So here, the government says, all your GSTR1 in relation to B2B, in relation to SSZ, in relation to exports, in relation to debit note, credit note, everything is auto-filled in your GSTR1. Also, the same information will flow to your GSTR 2A or 2B for your customer for availment of input tax credit. If you recollect your section 16, the other faculty who has taken you through input tax provisions, for me to take an input tax credit, the details of those supply of goods or services should be made available to me on the common portal by the supplier. Please make a note in your working note, section 37-GSTR1. So here, please make a note, section 16, for the purpose of input tax credit, the supplier under section 37 has to upload a return. That return is auto-filled by virtue of e-invoice. This is what the law says. Now they're saying how customization we are going to make. Further, what is the other advantage? Standardization. Look, if you look into invoice of L&T, if you look into invoice of Infosys, if you look into invoice of Hero Motors, if you look into invoice of Amazon, each supplier has got a different style, different mechanism of capturing information. I'm going to standardize the data. Interoperability. The moment you get an e-invoice, the QR code is there. Scan the QR code, you can do the accounting automatically, auto processing of information on the basis of that. That is what the promise government of India is going to give. Auto population of data into GST returns we have discussed. Reduction in disputes and improvement in processing time for the department, for scrutiny of e-way bill, for verification of your returns. All these things are going to become ease of doing business. Now, sir, having understood all this, what is the provision? What is the section or provision we need to read? Rule 48 is the first provision you need to read or remember. Please make a note in your working note. Rule 48. sub-rule 4. Rule 48, sub-rule 4. Anyway, this PowerPoint presentation is there. Also, people are listening to me offline mode, online mode. This will be helpful for you for your examination purpose. This Rule 48 says that any person who is registered under the GST law, I repeat, any person who is registered under the GST law who has been notified. Sir, what is this? Only a registered person, and that registered person who has been notified, that registered person, he has to issue an invoice. He has to prepare an invoice. How? By including some information which is there in a form called INV01. INV01. After obtaining IRN. Now, this is the crux of entire your understanding. Now, what the lawmaker said, look, first they're talking about a registered person. That registered person, they have notified. Now, as of today, for your May 2021 examination, a registered person having a turnover of aggregate turnover above 100 crores, registered taxable person having an aggregate turnover above 100 crores is the person notified as of today for your May 2021 attempt as the person who has to issue an invoice, That invoice should contain the details required under Form INV01. So what is that INV01? Just now we have seen a template called e-invoice. Part A, there are 3 parts I have shown. In the first part, IRN, that is hash key 56 digit. There is a QR code that is compulsory. Details of supplier, details of recipient, location from where it is shipped, location where the consignment has to be shipped, details of HSN, unit code, quantity, unit of measurement, per unit rate, discount, any other charges, rate of tax. All this information is something which is compulsory. So unless you quote IRN, unless you quote that QR code, this is not going to be a valid invoice as per Rule 48. IRN should be obtained by filing such information on GST electronic portal. So they say, how you get this IRN? There is a notified GST electronic portal, which is nothing but a e-invoice portal on NIC. The law says, as per this rule, only those set of notified people have to furnish that information on the e-invoice portal. The moment you furnish that data, you get an IRN. So what is the data I have to give? There's a form called GST INV01. The moment you fill the details as per this form INV01 on the notified government portal, that portal throws out something called IRN along with QR code. Now, this is what the lawmaker says as per Rule 48, where e-invoice has to be issued. Going further, what I have to understand? The commissioner may exempt a class of registered persons for a specific period. Now, lawmaker always keeps the cushion. Lawmaker always wants to make a difference. Not everyone is possible. Not everyone can be brought into clutches of law. The moment I say 100 crores and above, there could be some industry, there could be some service sector where it is cumbersome to issue an IRN. Example, you have this insurance company, you have banking company. In banking company, if you have done your bank audit, you would have seen that on an average in a day, there are thousands of bank charges levied in a day. For those thousands of transactions, if the volume of data reported to be on the GSTN portal, one, the government portal should withstand to the crowd. Second, there should be enough internet settings and data to be collected from banking sector. A lot of practical difficulty. So they have given authority to the commissioner to notify some people who need not get into this e-invoice issuance. Now, what they say, every invoice issued by a person for whom this sub-rule 4 is applicable, if he has issued an invoice which is other than as per sub-rule 4, then they say it is not an e-invoice. It shall not be a e-invoice. Now, I'll come to this to explain in detail. I'll explain in detail. please note whatever I have been highlighting. Now, know your customer, KYC. Similarly, know your supplier. Lawmaker said, please know your supplier. If your supplier is a person who is having a turnover, aggregate turnover exceeding 100 crores, and that registered supplier is not exempted by a commissioner, then that registered supplier should issue a tax invoice having the requirements of e-invoice. That means QR code, IRN number, and other information. So what if my supplier is issuing an invoice which is not having that? The law says, red color in box, that shall not be treated as an invoice. The moment you say it is not treated to be an invoice, availment of input tax credit gone. The complaints from the supplier that he is issuing an invoice as per the law is gone. So supplier is affected, customer, recipient is affected. So it's a two-sided urge, two-sided sword from the complaints point of view. So please, students, read this GST e-invoice provisions. Reason, May 2021, this is one compulsory question you can expect. So if there is a supplier who has been notified, who falls into the set of notified category, and he fails to issue invoice under Rule 48, Sub-Rule 4, then that shall not be considered as an e-invoice. The moment it is not considered as an e-invoice, what is the implication? The recipient cannot enjoy the credit, supplier is not complying with the law. Now, as of today, this is applicable again for your May 2021. Reason for your examination May 2021. All the amendments till 31st October 2020 are covered. I repeat, for your May 2021 notifications or amendments till 31st October 2020 are covered. This is a notification which was brought in 1st October. They have exempted few registered persons. First thing, SEZ unit. They are not exempted SEZ developer. SEZ unit has been exempted from issuing an e-invoice. So what if a registered person who happens to be a supplier who is a SEZ developer? Unfortunately, SEZ developer has to issue an e-invoice. It could be a drafting issue or something we don't know, but as of now, the law says that SEZ developer has to issue an e-invoice. SEZ unit need not issue. And as you know, majority of the cases, SEZ suppliers are export. So that doesn't need for, or there is no fraud or leakage of revenue. Next, insurance, banking company, financial institution, or NBFC. Insurance, banking company, financial institution, NBFC. All of these four exempted from e-invoice. GTA exempted from e-invoice. Passenger transportation services exempted from e-invoice. Exhibition of cinematographic films exempted from e-invoice. Now this exhibition of cinematographic films. Sir, is there an entity who is exceeding 100 crores? Recently, Reliance have taken over, when Jio was launching their new product, it is a live telecast of movie at your home, launching of screens. It could be a screen, multi-screen, or multiplex, or it could be a different screen. Now, any exhibition of cinematographic films or rights, any above 100 crores, exemption from e-invoice. Now, for computation of aggregate turnover, they say any of the preceding financial year from financial year 17-18, I repeat, from financial year 17-18 till the notification, till this notification date, all the above set of people, if they have aggregate turnover exceeding 100 crores, though they have to comply with the law, as of now, Commissioner has notified these are the people who are exempted from issuance of e-invoice. Next. With effect from 13th, this notification says, all registered persons, excluding the list what we have talked about, from 1st October, they have brought in first amendment, where aggregate turnover is exceeding 500 crores, e-invoice is compulsory. For those set of people who have exceeded 100 crores, with effect from 1st January 2021, e-invoice is compulsory. Now, preparation and issuance of invoice as per 48.4 has to be made for registered person or exports. Now, this they say all B2B or exports or SSZ supply. Please keep in mind, e-invoice is applicable when there is a supply of B2B, when there is an export, when there is a SSZ supply. These three category These three category, e-invoice is compulsory. Let me come to my Excel. To make you more clear with this particular understanding. Hope you are able to see my Excel file. Now, let me cover month of Jan 2021. I'm talking about a registered person who is having a aggregate turnover greater than 100 crores. Now, during Jan 2021, supplies are B2B, supplies are B2C. Debit note for a B2B customer. Credit note for a B2C customer. Then supply SEZ supply with payment of tax. Export without payment of tax. Now, question comes here. For each category, is e-invoice required? Yes or no? This is my category and e-invoice requirement. For B2B, answer is yes, e-invoice is required. Why? Sir, notified registered person, more than aggregate turnover, more than 100 crores, e-invoice is compulsory, effective from 1st January 2021. 1st January 2021. Now we are talking about the period of Jan 2021. For B2B, yes, it is required. B2C, no, it is not required. A debit note issued for a B2B, again, since it is B2B, yes. Credit note issued for B2C, no, I need not issue a e-invoice. SEZ with payment of tax, again, yes. Exports without payment of tax, again, yes. So this is how I apply my Rule 48 Sub-Rule 4. Rule 48 Sub-Rule 4. Please keep in mind, examination, testing of applicability of e-invoice on the basis of nature of supply. Testing of apply of e-invoice on the basis of your category of supply. This is one thing which you can expect for 2 marks. The advantages and provisions in relation to e-invoice, 4 marks. This is what you can expect from your examination. Let me go back to your presentation. Hope you are able to see my slide. Now, sir, what is the details I have to present when e-invoice is issued? What is the details I have to present when an e-invoice is being issued? When the e-invoice is being issued, as we have discussed, what supplies we have discussed, invoice number, date, invoice, what is the nature of document, invoice, debit note, credit note, we have to report that under invoice. Buyer, GST name, GSTN, name, address, place of supply. Details of quantity, what is HSN, place where the items are being dispatched. Exports, what is the shipping bill, what is the port code, what is the date of export, whether you are claiming a refund, e-way bill transactions. All this is the information which has to be covered in relation to your e-invoice. Now, so what if there is no e-invoice issue as per Rule 48? So if I don't issue an e-invoice, first and foremost, my invoice under Rule 36, it is not compliance. I repeat, for the recipient who is buying the goods or services, he cannot take the input tax credit because it is not considered as a invoice. Second, for the supplier, since he is not compliant with the compliance of issuance of invoice as per the law, the officer may invoke this section 125 for levying a penalty of 25,000 under CGST, 25,000 as SGST, 50,000 is a total exposure. Next. So what is the process for issuance of e-invoice? Very simple. People who doesn't have exposure on GST, for your examination point of view, this one slide is good enough for you to make you better understanding. A supplier of goods or services who has been notified for whom this Rule 48 is applicable, what he has to do? Prepare an invoice. Prepare an invoice as per your Tally or ERP or SAP or any accounting software. That invoice should have all the information what is required as per my INV 01. When we see that particular template, your goods description, HSN, the unit of measurement, quantity, unit price, per unit price, discount, rate of tax, this information is compulsory. Once you have all that, you fill that information into a schema or a utility file. Now, government has said, from your accounting software, you can integrate to the government portal, or you can integrate your data or accounting software to a GSP, or I'll give you an offline utility. I repeat, government has given 3 options. Option number 1, directly the accounting software can be integrated with the government portal called NAC. As of now, above 500 crores, government has permitted to the integration. Second option, you don't come to me because you are not exceeding 500 crores. Do one thing. There is something called GSP ASP. You integrate your accounting software with that GSP ASP, where your data gets automatically posted to my government portal. Option 2. Option 3, I'll give you an offline Excel utility. You fill the data in offline Excel utility, generate something called JSON. Now, all these 3 modes, what they say, please furnish that invoice details to my government portal. What is the government portal? They call IRP, Invoice Registration Portal. Invoice Registration Portal. The moment you report your invoices to my IRP, the moment you report the details to IRP, there is a validation. The government portal does the validation of data. Please keep in mind, as of today, 2 working days are permitted for reporting. Like 15th January 2021, I have raised the invoice. 15th, 16th, 17th. Within those 2 working days, I can report that data invoice to my IRP. If I report on 18th, then the validation fails and it says it is out of date. So government has got set of validations, GST number or calculation of your invoice details. Some sort of validation is done on this IRP, Invoice Registration Portal. What is that IRP? The government portal where your invoice is registered. Once the validation is successful, this IRP is going to return something called e-invoice. Sir, this e-invoice will have information called IRN, Invoice Reference Number. Means all the details what you have furnished to the government portal, that details are recorded in Invoice Registration Portal, and this Invoice Registration Portal is throwing out the data called IRN along with a QR code. What is QR code? Quick response code. We have, if you recollect, we have seen that template of e-invoice where the QR code is there, the IRN is there. So what is IRN? It's a 56-digit hash key. Hash key. What is an hash key? It's a logic. When you do a programming, there's a logic embedded which recognize what is the details of IRN. Precisely, it is nothing but your GST number followed with your invoice number. That is called hash key or IRN. IRN is a unique number. If you take millions of data, none of the IRN will be same. It has got a different IRN. So this is what the process involved in preparation of your e-invoice. Now, with this, we come to the conclusion of our e-invoice under GST law. Again and again, I repeat for the benefit of students, examination, this is a compulsory question. So please be prepared for this e-invoice. Next, moving on. There's one provision called section 32, prohibition of unauthorized collection of tax. Now this section says that, look, I authorize you as a registered taxpayer, I authorized you as a registered person to collect tax only when I have given your registration certificate to do so. If not, you're not authorized, or you're as a registered person, you cannot collect the tax. So here they say, when I file an application, I filed an application. If you recollect our Excel file, what we are talking, I have to make an application within a period of 30 days from the date of liable for registration. I have filed my application after 45 days. By mistake of law, from day one I am liable for registration, I have been collecting taxes. Now, please keep in mind, revised tax invoice can be issued only when only when I have registered within a period of 30 days from the date of liable for registration. If I don't, then I cannot collect tax. I cannot even issue a reverse tax invoice because I filed my application after 45 days of the day from where I become liable for registration. This is one set. Second set. One of your friend, Brinda, asked suspension or cancellation of registration. My proper officer has suspended my GST number. Why there is a suspension? Continuously for a period of 6 months, I didn't file my GSTR 1, I didn't file my GSTR 3B. So the proper officer has suspended my GST registration. He has issued a notice under the law saying that, look, you have defaulted. GSTR 3A is one document where he says, you have to file your form, but you have not filed, whereby I am cancelling your GST registration. Though I have received a notice for cancellation, though I have been temporarily suspended from registration, I continue to issue invoice, I continue to collect taxes. That is what the law says. You are barred from collection of tax. The moment you do, this is an offense. When we read with our penalties and offenses, we will come across this particular section 32. So, where a supply is made for a consideration, where every person who is liable to pay tax shall, okay, now this is your prohibition of collection of tax. Next is your section 33, which deals with your amount to be indicated on a tax invoice. Typographical error 32 was mentioned. It says, having registration, having received a money, when you issue a tax invoice for your supply, please mention on your tax invoice the breakup of tax. This is what your law says, breakup of tax in relation to that particular amount what you have collected. This is what expected as per section 33. Now, we move on to the next important hardcore discussion of today called credit note under GST law. Probably I'll take 10 to 15 minutes time on this particular credit note. Reason, very, very important. One, from examination point of view. Two, from your GST audit point of view. Three, from your post-qualification practice point of view. I repeat, all of you are going to be future chartered accountants. You are going to handle the assessee, the client, in relation to GST matters for assessment appeal provisions. Also, you may take up GST audit for the purpose of helping them with filing annual returns or filing monthly returns. This is one provision of credit note where you have to spend your time to understand thoroughly. I start with my first discussion of today, where I have taken an example called credit note as per books of accounts, credit note as per GST law. Now, this provision, section 34, says, section 34 says, let me take you one by one. A credit note is to be issued by the supplier. Now, look at the language they have used. A credit note has to be issued by whom? By the supplier. So, first and foremost, can a credit note be issued by a buyer? Under GST, if the customer asks, if the recipient says, sir, you have supplied goods for short quantity, don't worry, I'm going to raise a debit note from my end, or I'm going to raise a credit note from my end. Answer is a big no. No concept of debit note or credit note by a recipient. Under the GST law, a credit note can be issued only by a supplier. Sir, when can I issue a credit note? 1, 2, 3. Though it is there on the slide, for ease of your convenience, write in your working note, a credit note can be issued where the taxable value or tax charged, I repeat, a taxable value or tax charge in that invoice is found to exceed the taxable value or tax payable in respect of such supply. Human errors. When I'm preparing a purchase order or when I'm preparing a tax invoice, my purchase order says 100 rupees per unit. But when I'm issuing a tax invoice, by mistake, I have shown my per unit taxable value as 120 rupees. I repeat, when I'm raising a tax invoice, my purchase order says 100 rupees per unit. By mistake, I have raised a tax invoice with 120 rupees per unit. Taxable value is higher than my value. Then I can issue a credit note. Alternatively, tax charged. Sir, I have to raise an invoice with 12% rate of tax. By error of commission, I have considered 18%. So, either your taxable value has been charged higher or tax charge is higher. In that case, in relation to that supply, I can issue something called credit note. Write down in your working note. First point, taxable value or tax charge higher than the taxable value or tax to be charged in relation to such supply. So here, two important things, taxable value or tax. Next. Where goods supplied are returned by the recipient. Why? Various reasons. When goods are returned, quality issue, maybe wrong shipment, maybe what I can say, excess shipment. When I have like example, I'll give you example of Honda or Maruti. Every day, Honda on their portal or Maruti on their vendor portal, they'll say, Mr. X supplier, ABC Limited, Y, Z, now various vendors, they'll say, this is a schedule, 10 o'clock to 10:30, 100 pieces. 10:30 to 10:45, 120 pieces. They'll give you a schedule for delivering a particular category of goods in that particular time slot. If my time slot is 10 to 10:30, I have supplied the goods or my vehicle reached the factory of Maruti at 11 o'clock. My slot is 10 to 10:30, but my vehicle reached at 11 o'clock. That Maruti says, no, go back, take it back. The goods are returned to the supplier. So when the goods are returned, then I can issue a document called credit note. Third, where goods or services are both supplied are found to be deficient. Whatever goods or whatever services are supplied, those are found to be deficient. Again, human dependency. I have packed 100 units in a box, counting 98 pieces were packed, 2 pieces were short. Or in the process, in the transportation, some goods were lost because of box breakage or whatever it is. In relation to services, deficiency. Expectation is that I want to have a painting done like a horse, but the painting outcome has come like a donkey. There's a deficiency in service. Audit has to be done or some sort of due diligence has to be done. Due diligence was not done, less all were done. Deficiency in service. So these are the three categories. These are the three categories where a credit note can be issued by a supplier. I repeat, a credit note can be issued by a supplier. There is no mechanism that buyer can issue a credit note under GST law. This is what we need to understand. So this is what the section 34 talks in relation to issuance of a credit note. Section 34 talks in relation to issuance of a credit note. Now, let me go further on this. Section 34 further says, you have to issue and disclose a credit note in the written for the month during which such credit note has been issued. Disclosure of a credit note in the month during which such credit note has been issued. I can issue a credit note, there is a due date, September from the end of the following year during which such supply is made, or filing of annual return, whichever is earlier. And law says there cannot be a reduction in output tax when there is an incidence of tax which has been passed on. I'll touch this point little later. Now I'll stress little time on this particular two aspects called disclosure and then time period. First aspect, disclosure. Whatever credit notes I have issued, those credit notes I have to disclose in a written. So which written? GSTR 1, not a written. GSTR 2, not a written. GSTR 3, that is a written as per section 39. As per section 39. However, now lawmaker says by virtue of rules, all your credit notes have to be reported in your GSTR 1. filed under section 37. That filing, that reporting can be done when in a particular month during which such credit note has been issued. So as of now, the law says that the month in which a credit note has been issued, that is the month in which I have to disclose in my return called GSTR 1 under section 37, adjustment of that in my section 39 GSTR 3B. So technically, during the month in which I have issued a credit note, that should be reported in my GSTR 1, also adjustment in my GSTR 3B. This is what we need to understand with respect to my disclosure. So can I go and disclose in a month other than the month I have issued? As of now, Common Portal is allowing that. As of now, department various circulars have permitted for me to do that set of or adjustment of credit note. Next point. This time period for issuance of a credit note. Please make a note in your working note. One adjustment for 2 marks can be expected for this issuance of a credit note. I'll take you through examples, don't worry. First, we'll understand the provision. Then we will go in detail with an example. The lawmaker says the credit note can be issued. What is the due date? On or before September month following the financial year during which such supply take place. Means when I talk about financial year 18-19, my September, 6 months from the end of financial year, I can issue a credit note for a supply which was made during a financial year 18-19 till the month of September, that is till 30th September 2019, or filing of annual return I repeat, either September or filing of annual return, whichever is earlier. So we need to keep in mind our September month or filing of annual return. 100%, this particular annual return does not come into picture. Reason, majority of the people couldn't file their annual return before September. Reason, the government portal itself has not published the annual return till date for financial year 17-18, 18-19, 19-20. So for the technically the time limit available for me is September for all these financial years. Examination not relevant, practically relevant for you. Now let me come to my Excel file to give you a detailed understanding of this particular provision. Please confirm you are able to see my Excel file. Now, this particular credit note under section 34. Let us understand various provisions, then see how it is covered under 34 or not. First, scenario 1. Now, let me take first scenario. Goods supply got damaged. Good supply, I would say, received in damaged condition. Goods supplied are received in damaged condition. By whom? By the recipient. Now, I'll put the scenario. Meanwhile, I would like all of you to think over and tell me answer yes or no. For point number 1, yes or no. Second, services rendered for rupees 10 lakh, negotiation made for rupees 8.5 lakhs. Due to working capital issues. Third, customer sent back 2 years old supply due to quality issue. Fourth, goods supplied on promotional basis, buy 10 get 1 free. Sample items not received, or promotional quantity not received. Friends, I have taken 4 scenarios. I want all of you who are listening to me, make an attempt and say, for each scenario, 1, 2, 3, 4, your answer is yes or no under section 34. First scenario, goods supplied received in damaged condition. Goods supplied for 100 numbers, received 10 numbers in damaged condition. What would be your answer? Can I issue a credit note under section 34? Yes or no? Yes or no? Let me see any of your answer. For scenario number 1, what would be your answer? Can I issue a credit note? Yes. Bargo says 1 yes. 2 he says for 2 no. Okay. Let me wait for a couple of other answers. Sri Devi says 1 no, 2 yes, 3 yes, 4 no. Okay. Okay. Good. Now, let me clear one by one for you to have a better understanding. Now, first point, goods are supplied for 100 numbers, received 10 numbers in damaged condition. Now, when we talk about credit note, please recollect your working note. First, taxable value or tax charged higher? Answer is no. Second, goods supplied are returned. Now, it is not a case of return. Goods supplied for 100, recipient has received entire 100, but he says 10 are received in damaged condition. Point number 3, deficiency in supply. Now, 100 have supplied, 100 are received. Yes or no? 1, there is no taxable value or tax charge higher. Second scenario, goods supplied are returned. Now here it is just reporting of information. The goods are not returned by the customer. Third, there should be deficiency. So there is no deficiency. So here, no credit note cannot be issued as damaged goods are not returned back to supplier. This is the answer for scenario number 1. Okay. Now, anyone has got any further clarity or thought process? Let me know. Point number 2. Services are rendered for 10 lakhs. Negotiation was made for 8.5 lakhs due to working capital issue. Now, for issuing credit note, taxable value or tax should be charged higher. Now, it is not a scenario. There should be a goods return. This is a service not applicable. Third, there should be deficiency in service. There is no deficiency. The recipient is not in a position to pay because of his working capital. He has negotiated for the payment. Now, because it is a negotiation, it is not deficiency. My customer has not complained that your services are deficient. Customer says, sir, I have a working capital issue. I cannot pay entire 10 lakhs. At best, I can pay you 8.5 lakhs. Now, this reason of working capital issue, it cannot be attributed as deficiency. So again, I will say, no, credit note can't be issued as no deficiency in service reported. Third point, customer has sent back 2 years old supply due to quality issue. Customer has sent back 2 years old supply due to quality issue. Now, this falls straight away in second category. Goods are returned back. Now, please note, there is a time limit. What does the law say? For a particular financial year, till September or filing of annual return, whichever is earlier. Now here, when I say 2 years, already that period of September is over from the respective financial year. Accordingly, no, credit note can't be issued as time limit set is over. This is the answer for third scenario. This is the answer for third scenario. Next. Next, fourth scenario. Goods are supplied on promotional basis. Now, what we say, buy 10, get 1 free. Now, when the supply happened, those promotional quantity were not received by the customer. Those promotional quantity were not received by the customer. When I say promotional basis, whatever additional one item I'm giving, I'm not charging anything for that. Like example, if I send 100 pieces, my promotional item will be 10 pieces. Right? There is no charge or levy for promotional item. Now, accordingly, I need not issue a credit note. Answer is, sir, I have not billed for my promotional items. I admit that there is a deficiency in supply. Since the promotional items were not received, I will supply that later. It doesn't have a value. It doesn't have a tax implication. Accordingly, we will not bill for. We will not issue a credit note. That is the answer for your point number 4. Now let us look at the time limit for issuance of credit note. I'll give a scenario. Let's copy here. Heading. Now, scenario 1. Supply during financial year 2017-18. Credit note issued on validity. We will test the validity. Now, what we will do, we will check what is the date credit note is issued, whether it is valid as per section 34. Right? Now, supply is made during financial year 17-18. Credit note is issued on, say, 15th July 2018. Scenario 2. Supply made during financial year 17-18. Credit note is issued on, say, 10th October 2018. Third, supply during financial year 18-19. Now, friends, please make a note. This provision, when I'm explaining to you, I'm excluding the date which was extended by virtue of an order. There is an order passed, there is an order passed for availment of ITC and issuance of a credit note. This is for only financial year 17-18. So for brevity, I'll change it to 18-19 so that you'll have a better clarity. I'll change the dates to 2018-19. Yeah. Supply during financial year 1920. My credit note is dated 15th September 2020. Fourth scenario. Supply made during financial year 1920 and credit note is issued on 1st Jan 2021. Now, please note, for a particular financial year, now here law also says, please check your filing of annual report, annual return filing date. My annual return filing for 18-19, say this annual return has been filed on 1st January 2020. Same for 1st January 2020 and 1920, this is filed on say 15th January 2020. 15th Jan 2020. Now, for section 34, I have to check two dates. One is September. Second is annual return. Supply made during a financial year. That supply 6 months from the end of the financial year, that is till the month of September, or filing of annual return, whichever is earlier. Earlier of these two is what I have to check from law perspective, right? Now, when I'm checking this particular aspect, first scenario, my supply is made during financial year 18-19. Annual return is filed on 1st Jan 2020. Credit note is issued on 15 July 2019. Now, for financial year 18-19, September, that is till 6 months, 30th September 2019. Now, this I can say, yes, a credit note issued under section 34 is a valid credit note. Second scenario, earlier of these two, I would say 10th October 2019. Now, is it within 6 months from the end of the financial year? It should, my financial year 18-19, that 6 months, September ends on 30th September 2019. So here I'll say no, since issued after 30th September 2019. Same way. Now, earlier of these two, 15 January, 15 September. Earlier is 15 September. Now, when I say 15 September, now let me highlight this also for you. It will be easy to correlate. Earlier of these two, 15 September is my earlier date. Now, was it issued before September, that is 30th September? Answer is yes. Then it is a credit note valid. In the fourth scenario, 15 January, 1st January, earlier of these two. For ease, I'll make this as 2019. 15th December. Now, my annual return is filed on 15th December 2019. My credit note is issued on 1st January. Earlier of these two, this is 15th December. Now, can I issue a credit note after 15th December? Answer is no. Credit note can't be issued after filing of annual report, annual return. This is what we need to answer from examination point of view. So friends, this is one model which is revolving with your credit note, which we need to understand. Raman has given an answer, 1 valid, 2 valid, 3 yes, 4 no. Raman, I believe your answers are in relation to this particular first example. I hope you have got the clarity with respect to the answers what I have given. Okay. Now, let us move back to our presentation. Law says a credit note cannot be issued if the incidence of tax has been passed on. Now, this is something which you need to understand from your law point of view and examination point of view. What do you mean by incidence of tax? Incidence of tax is nothing but burden. Means when I want to issue a credit note, I'm going to issue a credit note for the taxable value and tax. The moment I issue a credit note, the month in which that credit note is reported, in the GSTI 3B, whatever your output tax is there, that gets reduced to the extent of credit note. I repeat, my output tax reduces to the extent of credit note. Lawmaker says, look, the moment you have issued, passed on the burden of the tax, that means the burden of tax, instance of tax has been passed on to your customer, you cannot issue a credit note. Now, how do I prove this particular point in my practicality? This particular thing can be proved when customer has not taken input tax credit benefit. I repeat, customer has not taken the benefit of ITC. ITC, whatever we are billing, that ITC cannot be enjoyed or should not be enjoyed by my customer. So the moment my customer is enjoying that particular benefit, the moment the customer is enjoying the benefit of ITC, I cannot reduce that particular output tax from my books. So this is our point. How do we substantiate saying that incidence of tax has been passed on? So this instance of tax is nothing but burden. So the moment I passed on the burden of tax, then I cannot reduce that output tax. So whenever we issue a credit note, the lawmaker expects that the recipient has customer. I repeat, whenever we say the credit note has been issued, it is expected that the recipient has reduced his input tax credit or reversed his input tax credit. This is what is important for us from an examination point of view. Next, coming back, debit note. A very simple provision. Now, whatever we have discussed about credit note, ulta of that is my debit note. Lawmaker says, whenever there is a taxable value or tax charged in invoice is less than the actual value to be charged, then you recover that money of taxable value along with the tax by issuing a debit note. Now, unfortunately, law has not set any time limit for issuing a debit note. Credit note, there is a period of 6 months from the end of the financial year, that is September, or annual return, whichever is earlier, for reducing your tax liability. In case of a debit note, because it is a money being collected and paid to the government, law has not set any time limit for issuance of a debit note. Now, a couple of things you need to keep in mind from your practical point of view. For multiple invoices, one credit note or multiple credit note can be issued. Similarly, for multiple invoices, one debit note or multiple debit notes can be issued. This is what we need to keep in mind from your examination point of view. Now, we move on to the next important topic of the day, e-way bill. Again, from examination point of view, 4 marks theory or a problem can be expected. I repeat, 4 marks theory or a problem can be expected from e-way bill. Reason, amendments and extensiveness of coverage is in-depth. When you are looking from this chapter, examination, 6 marks is a weightage. Questions can revolve in terms of calculation when a tax invoice can be issued. Questions can revolve in terms of identifying when a credit note can be issued. Questions also can be tested from revised tax invoice point of view. The last topic is e-way bill. Now, what is an e-way bill? This is a document which is enabling movement of goods. I repeat, this is a document which is enabling my movement of goods. So what do you mean by movement of goods? Transporting goods from one place to another place. I'll give an example. So there is a registered person in the state of Bihar. This registered person has got factory located at door number 522. I repeat, there's a registered person in the state of Bihar who has got a place of business at door number 522. This fellow supplies goods to his customer who is in the adjacent building. This person who is making a delivery of goods to his customer who is in the adjacent building with door number 523. Goods are to be moved from 522 to 523. This is a document required for such movement. Whenever there is a movement of goods, then there is a requirement of e-way bill. Transporter should carry this document. So whenever there is a movement of goods through transportation, the transporter should carry e-way bill. So it is not happening through a transporter. So it is happening by me. Even transporter or any person who is acting as a bailee for the purpose of transportation, for the purpose of delivery, that e-way bill is required. It should be carried along with the invoice, delivery challan or bill of supply. Please understand, when there is a supply, invoice will come into picture. When there is no supply, delivery challan will come into picture. Sir, it is a supply of non-taxable goods, bill of supply will come into picture. So the law says on account of supply, e-way bill is required. On account of not other than supply, e-way bill is required. On account of bill of supply, e-way bill is required. It is mandatory when the value of consignment is above 50,000, including of all taxes, leaving certain exceptions. I'll come to that exceptions later. Important aspect when we do this computation of e-way bill, inclusive of taxes. Consignment having a value above 50,000. Then they say this should be generated before commencement of movement. Before commencement of movement. This is what the lawmaker has expected in terms of your e-way bill. Now let me come back to my Excel file for making you understand this particular concept of e-way bill. Now, e-way bill, it says on account of supply, not on account of supply, right? On account of supply, not on account of supply, or in case of your bill of supply. I'll ignore that for time being. Now, on account of supply, you know that there is a tax invoice. Now, please bear in mind, this is only for movement of goods. Services, no requirement of e-way bill. Only in case of movement of goods, my e-way bill is required. So on account of supply, the moment I say it is a supply, I have to issue a tax invoice. No second thought on that. No second thought on that. Not on account of supply. So what could be the case where material movement is happening not on account of supply? Job work. When I send material for job work, it is not meant for supply. When material is sent for exhibition, trade exhibition, so it is not meant for supply. I have sent goods on sale or approval. Again, it is not a supply. Sale or approval, I have sent it for sale or approval. At the time I have removed, it is not a supply, right? So these are the examples where not on account of supply. So whenever I say it is not on account of supply, I issue a document called delivery challan. I issue a document called delivery challan. Now, please keep in mind, my threshold limit for issuance of e-way bill when the value of consignment exceeds 50,000. Now, for computing this value, taxable, they say for computing this value of consignment includes taxes. This 50,000 includes taxes. So here my computation 50,000 always includes taxes. So let us take one example. Supplier in Rajasthan. Recipient, okay, I'll put it this way. Supplier recipient. Particular scenario 1. On account of sale of goods for rupees 48,000, GST applicable at the rate of 12%. Supplier is in say Andhra Pradesh. Recipient is also in Andhra Pradesh. Is e-way bill required? Now I'll put scenarios. Meanwhile, I would request you to give a thought process. Give a thought process and be ready with your answers. We will discuss that. Scenario 2. Goods sent for job work having value rupees 45,000, GST applicable at the rate of 18%. Right? Goods sent for job work having value. Goods sent for job work having a value of 45,000. GST is applicable at the rate of 18%. Supplier or the consignor who is moving the goods is in Madhya Pradesh. Recipient is in Odisha. Third scenario. Goods sent against warranty having value rupees 30,000. No GST applicable. Supplier is in say Kerala and recipient is in Delhi. Right? These are the three scenarios which let us discuss. Anyone ready with your answer? Please put it your question window. Let us cross-check and also discuss on that. Scenario number 1. On account of sale of goods for rupees 48,000, GST is applicable at the rate of 12%. Now let me see if there are any answers before we discuss on the answers. Okay. No answers posted yet. We will continue with our discussion. Right. First point, my value of consignment is 48,000. Right. On that, my GST is applicable at the rate of 12%. So 53,760 is going to be the cost of the consignment. Now, law says value of consignment including taxes. If it is exceeding 50,000, then e-way bill is required. So answer for scenario number 1, yes. Scenario number 2, my goods are sent for job work. The goods are having a value of 45,000 and these goods are chargeable at the rate of 18%. Now, value of consignment as per section 15, value of consignment as per section 15 is 45,000. It is not including taxes. Why 45,000? When I send for job work, I don't issue a tax invoice. What do? I issue a document called delivery challan. My value of consignment is only 45,000. So can I include my GST in this? Answer is a big no. It is not a supply. When it is not a supply, no tax invoice. Okay. First case, yes, tax invoice to be issued for rupees 53,760. This is my answer. Second case, delivery challan is issued. Only value of consignment to be considered. So here, when the goods are sent for job work, my value of goods is 45,000. Though tax applicable is 18%, I don't give importance to the value of tax because there is no charge. When there is no levy, when there is no tax invoice, the tax has no meaning to it. So I'll say e-waybill is not required. Next. Third case. My value of goods is only 30,000. And this value of goods is on account of warranty. When I say warranty, it is post-sale. When there is a failure to perform, I replace the goods under warranty period. So when I'm sending it on warranty, I don't raise a tax invoice. Rather, I'll send it on a delivery challan. Delivery challan is issued, and I would say e-waybill is not required. Second case, no e-waybill required. Third case also, I'll say no e-waybill required. Delivery challan is issued, only value of consignment to be considered. And the value of consignment is 30,000. I will not issue any e-waybill. So this is what basic thing we need to understand, how we calculate our e-waybill, value for e-waybill, and whether e-waybill is required or not. Let me come back to my presentation screen. Right. So let me see if there are any doubts posted till now. Raman says answer is yes for point number 2. Yes, Raman. Okay. Now, having understood the basics of e-waybill, when should an e-waybill be generated? Now we should know when an e-waybill is generated. For those students who are not exposed to indirect taxation, who didn't had much attention to indirect tax laws, don't worry. This is an occasion for you to learn in a better way. So this concept of e-waybill, it says when an e-waybill is generated. It says before movement of goods is caused. Now after movement, definitely I cannot raise an e-waybill. So I have to raise an e-waybill before the movement of goods is caused. Now the first example we're talking about Bihar, door number 521, door number 522. Though the movement is between next door, because there is a movement of goods, I need to issue an e-waybill. Sir, are there any exceptions? There is one slide dealing with that. We will come to those exceptions in a while. So before, in relation to supply, interstate, intrastate, export, import. Now when there is a supply, that means whenever there is a tax invoice, either I as a seller, I issue a tax invoice, or I as a buyer, someone is raising a tax invoice on me. I repeat. When I say in relation to supply, either I am a seller or someone is a seller to me. Now, seller may be registered, recipient may be registered. Please bear in mind. In case of export, I am the seller. My buyer is in, say, America, USA. My buyer is not registered under GST. Or I have a buyer in Japan. That fellow is not registered under GST. So in case of export, the other recipient is not registered. In case of import, goods are shipped from Tokyo. Goods are sent from, say, Republic place of Korea. Now there, the supplier is not registered. As an importer, movements of goods are happening from port to my registered factory. Within taxable territory, e-waybill is required before movement of goods. So whenever I say supply is where sale of goods, purchase of goods. So it could be in case of my purchase, in case of my sale. I also need to see supplier. I also need to see buyer. So that is point number A. For reasons other than supply, like we have discussed, a job work, exhibition, sales return, purchase return, line sale. These are all the cases where my e-waybill is required, even though it is not meant for supply. Inward supply from an unregistered person. Now, this is a third category where we have picked up, where supplier is a person who is not registered. Recipient is a person who is registered. Example. So there is a small-time job worker who is manufacturing some machinery. So there is one old worn-out machinery which is to be purchased from state of Punjab. The buyer is in the state of Haryana. The buyer is in the state, buyer is in the state of Uttar Pradesh. Buyer is in the state of Uttar Pradesh. Seller is in the state of Punjab. From Punjab, the goods are sold to Uttar Pradesh. Seller in Punjab is not registered. Buyer in Uttar Pradesh is registered. And if the value of consignment is more than 50,000, the buyer in Uttar Pradesh has to prepare an e-waybill. Next. Who should generate an e-way bill? Supplier if he is registered, recipient if he is registered. Now, law does not compulsorily say only a supplier has to generate or only a recipient has to generate. Now, situation 1, case 1, both supplier and recipient are registered. Both supplier and recipient are registered. I draw back your attention to initial conversation of X works CAF. If it is X works, A who is supplying the goods, B, the moment it is cross factory of A, B has to take care of e-way bill. If it is a CAF transaction, till the factory gate of B, A has to take care. So it depends on the transaction A or B. Now this is case 1. Next, case 2. A is a supplier who is unregistered. B is a recipient who is registered. Now in this case, since B is registered, B should generate an e-way bill. Because B is registered, he has to generate an e-way bill. Third case, A who is a supplier not registered, B who is a recipient also not registered. Now the movement of goods is happening between A and B where both the parties are not registered, right? In that case, transporter can prepare an e-way bill, or either of A or B using their PAN number, they can generate an e-way bill. Please note, examination, case 3, you can expect one scenario for your testing. Transaction for e-way bill, case 3, where both supplier and recipient are not registered, who can generate an e-way bill? As the provision says, transporter or either of A or B using their PAN number. Now, this is an exception to your 50,000 what we are talking. If the goods are sent for job work, principal is in one state, job worker is in another state. Irrespective of the value, in case of an interstate movement, principal has to generate an e-way bill or job worker generate an e-way bill. Please note, where goods are sent for job work. Now, government wants to keep a track on material movement. So, whenever there is a material movement, irrespective of the value of the goods, in case of interstate movement, government says it is compulsory to have an e-way bill. Now, this is one exception to value what we have discussed in a while. What if the goods is supplied by e-commerce or courier agency? Now, Amazon, Flipkart, etc. Recipient is an individual where the goods have to be made through e-commerce or courier. Now, either of these parties, e-commerce or courier, those people can raise an e-way bill. What if the person exempted from registration who causes movement of handcrafted goods? Now, please recollect our registration chapter. In registration chapter, section 23, we have referred to one notification called 10 of 2019. Please recollect our discussion on registration where handcraft goods made of hand, there is an exemption notification irrespective of this section 24 compulsory registration. When there's a movement of goods from one state to another state up to a sum of rupees threshold limit, that 40 lakhs, 20 lakhs, what we have discussed, using PAN, this handcraft supplier can cause the movement of goods. Please make a note. Here, irrespective of the value, the supplier has to generate an e-way bill. Sir, without GST registration, how can an e-way bill be generated? PAN is sufficient. So using the PAN, that supplier can generate an e-way bill. When can the transporter generate an e-way bill? Now, this is a provision where supplier and recipient may be registered, may not be registered, or supplier and recipient are unregistered. In both the cases, transporter can generate an e-way bill. Now, how to generate an e-way bill? First thing, there is a government portal which is given after e-invoice. This, along with e-invoice, this particular e-way bill is being generated. Law says that you just log on to this portal, fill this form called Form A. This part A consists some information what is the details of supplier, who is the recipient. If it is on account of supply, invoice details. If it is not on account of supply, your delivery challan. Who is the consigner? Who is the consignee? From where the goods are dispatched, where the goods have to be reached. What is the document? Is it an invoice or is it a delivery challan? Details of the document along with the reasons of transportation. Next, part B. This is the important thing. Entire your e-way bill is dependent on this part B, where it will have what is the vehicle number and what is the transporter ID. Now, under GST, all the transporters, they have an option to register themselves with a transporter ID. Why? These are the people who carry this e-way bill, and if there is a transport vehicle damage breakdown from one vehicle to another vehicle when the goods are moved, this part B, vehicle number, has to be updated. So for that purpose, every transporter will be assigned with a transport identity number that can be used for the purpose of your e-way bill generation. Part A, basic information of documents. Part B, vehicle related details. Now, there is something called multi-mode transportation used for delivery. Like the goods cannot be moved in one vehicle. It has to move from one vehicle to another vehicle or one mode to another mode. From road, it goes to air. From air, it will come back to road. That is the case we are talking. In case of multi-mode, every movement, every change in the vehicle, part B, the vehicle number has to be updated. So this part B can be updated by the supplier, recipient, or transporter. Mode of transport involves rail, transport of road, air. In case if there is a transportation by road, transportation by air, transportation by train, or any other vehicle, all that transportation change in the mode of transportation, transporter has to update the part B. Now, there is a concept called consolidated e-way bill under GST law. Now, usually when there is a transportation, when a vehicle has to carry the consignment, that vehicle has got multiple consignments. So a couple of consignments may have a bill, couple of consignments may not have an e-way bill. Now, transporter has a responsibility to generate an e-way bill for interstate movement of consignments where there is no e-way bill available. Further, where multiple consignments with multiple e-way bills are there, he can fill this form called e-way bill 02 and generate one unique identity number. This is in case of multiple e-way bill. Cancellation, very, very important. Sir, I have done e-way bill with the wrong information, with the wrong data, wrong value, wrong GST number, whatever be the reason. I can do the cancellation within a period of 24 hours from the date of its generation. However, this cancellation is not possible if at all, if the vehicle has been intercepted by a proper officer under the GST law. Now, validity of e-way bill, this depends on the mode of transportation. Please bear in mind, this is one amendment which has happened 1st Jan 2021. So for your examinations, what I am going to talk to you, this is not relevant. For your examination, your institute material is relevant. In this particular slide, the change which I have brought in is effective from 1st Jan 2021. For your examination, what is there in your institute material that is applicable? Please make a note, this 200 kilometers should be read as 100 kilometers, which is valid for May 2021 attempt. Kindly note, May 2021, this is one amendment where 100 kilometers, for every 100 kilometers, 1 day is the validity of e-way bill. From 1st Jan 2021, there is an amendment where this 200 kilometers was reduced to, 100 kilometers was increased to 200 kilometers. So as of now, for your examination, for every 100 kilometers, 1 day is the validity of e-way bill. If it is an over-dimensional vehicle, means it is a vehicle with road permit is given, which is an exceptional vehicle, huge vehicle with a multiple capacity. For those vehicles, for every 20 kilometers, the validity is for 1 day. Now, sir, what if the e-way bill I have generated for 3 days, it has been expired now because of natural calamity or disturbance or transshipment delay, accident, etc. There is a possibility of extending my e-way bill validity. I need to log on to the portal and put in the reason 8 hours before that expiry, seek for extension of that e-way bill. Now, what to do if there is a vehicle breakdown? Please fill that form B, move goods from one vehicle to another vehicle and mention those reasons on the part B. Rejection of e-way bill. Now, this is one provision where it says someone has raised e-way bill on my name saying that these goods are delivered from this place to this place. As a recipient, I have a possibility to reject that e-way bill 72 hours from the date of preparation of that e-way bill. So if I don't cancel, if I don't reject, then it is deemed that e-way bill has been accepted by you. So I have students, I have given one list of exceptions. This slide and next slide, this is a self-study slide. These are the cases where my e-way bill is not required. Paucity of time, I'm going to skip this. Delivery challenge should be prepared for each of the consignment, giving reference to the document, what is prepared. And when there is a multiple consignment, like example, Hindustan Aeronautics Limited to ISRO, when there is a multiple consignments, every consignment should have an e-way bill. This point we have already discussed. This point of bill to ship to, this is one important point which could be tested in your examination. Say, there is a seller called B. This gentleman B sells the goods to A, but at the instruction of A, the delivery is given to C. Now, it is a bill to ship to. B is a fellow who is in between. B sells the goods to A, ships the goods to C on the instruction of A. How to prepare e-way bill? Now, in this case, e-way bill can be prepared by B, who is ultimate seller, or by A. Now, when B is generating an e-way bill, B will clearly mention the billing is from location B, dispatch is from location of B, and bill to is the party called A, and ship to is the party called C. Now, in case A, who is a party is generating e-way bill, he'll say bill is happening from A, dispatch is happening from B, and this bill to is happening to C, and also ship to is happening to C. So this bill to ship to model is one provision which you need to remember from examination point of view. Last line, just bear with me for a couple of minutes, we will wind up. If I don't prepare an e-way bill as per section 122, the penalty applicable is 10,000 or the value of tax which is evaded, whichever is higher shall be charged as a penalty. Section 122, when we deal with our penal provisions, we'll have a detailed discussion on this in relation to this e-way bill violation. Friends, couple of other provisions in relation to e-way bill. In the forthcoming session, coming Saturday, 27, we will touch upon a couple of provisions and then we'll go on to the next topic. Till then, we will have a happy study and let's meet on coming Saturday. Good night. Thanks for your patience listening.